Yes, a very good morning to all of you. Yes, so how are all of you? How's audit? No idea what is happening in audit. You realize the power of audit? You underestimated the power of the subject. You thought, what audit theory, subject, little definition, little standards I do here and there. And then the audit paper, so MCQs is also there in the paper. So, in MCQ, I'm going to get a great, number of marks over there. And then little bit from the theory part of the paper. And then that will give me the, yes, what you say, the green signal for the subject of audit. But maybe, what you have assessed or realized for yourself, okay, that is not how things work for the subject of the audit. Just because you know a few concepts and a few content of your book, is it's not sufficient to prepare for the subject of audit, right? So this particular fast track batch is for us to do a SWOT analysis, is for for us to get a boost or to get a right track for the preparation for the subject, to do an analysis of, okay, these are the areas I missed upon, or these are the type of questions which are coming in the exam. Because you do eight things right also, but one or two things also you miss out, it goes into the wrong track. You understand? So what went wrong, what I could have done more correctly, right? Giving you the right momentum for the preparation of the subject. Okay, right? So how many standards are applicable at the intermediate level, right? From the auditing standards, how many? 35. Okay, anybody, any other number? How many standards are applicable for your exam, CA intermediate? Standards on auditing? Yes, 27 standards. Okay, so one standard on the quality control, and then you have the 26 standards on the auditing, right? So we have, what are the standards that we have? SA 200, which is overall objectives of the independent auditor and the conduct of an audit in accordance with the standards on auditing, right? So 200. Then 210, which is regarding agreeing the terms of audit engagement. Then we have a standard on quality control for firms, right, that perform audits and reviews of historical financial information and other assurance and related services engagement. Apart from that, SQC 1 quality control for firm, and SA 220 quality control for an audit of financial statements. Then we have SA 230 audit documentation. Then 240 the auditor's responsibilities relating to fraud in an audit of financial statements. 250 consideration of laws and regulations in an audit of financial statements, right? 260 265 not applicable at intermediate level, so you directly have the 299, which is regarding the joint audit of the financial statements. Then 300 planning and audit of financial statements. 315 identifying and assessing the risks of material misstatement through understanding the entity and its environment, right? Then 320, right, the materiality in planning and performing an audit. And then 330 402 450 not applicable at the intermediate level, right? Then after that we have the SA 500, which is regarding the audit evidence, right? Then 501 audit evidence specific consideration for the selected items. 505 external confirmations. 510 initial audit engagements opening balances, right? 520, which is analytical procedures, which is like an auditing standard, but we also have a separate chapter only on analytical procedures. Then we have SA 530 audit sampling, right? Then again 540 not applicable at intermediate level. Then 550, which is regarding the related parties. 560 regarding the subsequent events. 570 going concern. 580 written representation. In the 600 series, only one standard, SA 610, which is using the work of the internal auditors. Then 700, you have to know this one, right? The audit report, forming an opinion and reporting on financial statements. Then 701, communicating key audit matters in the independent auditor's report. 705, modifications to the opinion in the independent auditor's report. 706, emphasis of matter paragraph and the other matter paragraph in the independent auditor's report. And then we have 710, which is comparative information, corresponding figures and comparative financial statements. Okay, right? So is it like 27, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, right? 19, 20, 21, 22, 23, 24, 25, 26, 27, right? So these are the 27 standards which are applicable for our exams. Are you understanding that? Okay, right? Then many of these standards, we do the discussion along with some chapters itself. Like, first chapter we have is Introduction to Auditing, in which we cover SA 200 also and 299 also, right? The overall objectives also, and the joint audit of financial statements also, right? So what is one set of chapters that we have now apart from the standards is the Introduction to the Auditing. Right, so what are the advantages of audit? What are the inherent limitations of an audit? What are the types of audit? Professional skepticism, professional judgment, reasonable assurance, applicable financial reporting framework, all that we have in the chapter number 1. Right, then we have the basic concepts in audit, in which there are three basic concepts over there: audit risk, audit materiality, and audit evidence. Audit evidence is nothing but SA 500, which is audit evidence. Right, so basically three concepts over here. What are the three concepts? Yes, the audit risk, audit materiality, and the audit evidence, right? Three important concepts. If you understand these concepts, then you can approach or crack many other questions also in the exam, right? Then after that, very interesting, obviously an auditor should be knowing regarding the engagement letter and the auditor's report. So engagement letter is SA 210, and audit report we have four standards: 700, 701, 705, and 706, right? So engagement letter and the auditor's report. Then we have the risk assessment and internal control. That is, auditor, you need to assess the risk, you need to understand the entity and its environment, and also need to understand the internal control. So we have a discussion, a chapter regarding the risk assessment and the internal control. Then after that we have a chapter exclusively for fraud, right? Fraud and the auditor's responsibility in this regard. Okay, what are the types of fraud? Then why would a fraud be committed? What are the incentive, pressures, opportunity to commit a fraud? Right? Then what are the circumstances which could indicate that there is a possibility of fraud? Like discrepancies in accounting record, problematic or unusual relationship between auditor and the management, conflicting missing evidence, and the others. Right? So that's the chapter only talking about the fraud. Right? So this is one set of chapters which we have over there. Then after this set of chapter, what is another set of chapters we have? The audit quality control and the audit documentation, right? So audit quality control, that is SQC 1 and SA 220, which talks about the quality control. And then you also have the audit documentation, right? Documentation SA 230. Okay, what documentation is required to be kept by the auditor, right? Then obviously we need to plan an audit. So regarding planning as such, we have one chapter in which we discuss three things: audit strategy, audit planning, and audit program. Right, so audit strategy, then the audit planning, and then we have a discussion over there regarding the audit program, like constructing an audit program, right? Then the assistants are encouraged to keep an open mind. Then there should be review of the audit program. What are the advantages, disadvantages of audit program, right? So that is again two chapters over there: quality control, documentation, and then the audit strategy, audit planning, and the audit program. Then we have a dedicated chapter for two of the standards over there: analytical procedures and the audit sampling, right? So analytical procedures is SA 520 and audit sampling is SA 530, right? So analytical procedures and audit sampling. Then we have another chapter which is regarding the audit in an automated environment, right? So what are the aspects to be considered by the auditor while doing an audit in an automated environment, right? So now up to this audit sampling, these were all regarding the terms and regarding audit process and all. Now we start with the special audits. Like one of the special audit over there is the audit in an automated environment, right? Then after that we have the company audit, right? So we have a few sections of the Companies Act 2013 related to accounts and mainly related to audit, like mainly from section 138, which is internal audit, which we discuss along with internal control, then up to 148. So 138 is internal audit. In between 139 to 147 is statutory audit, and 148 is cost audit, right? So we have internal audit, which we discuss along with internal control. Then we have the discussion regarding the stat audit, 139 to 147, and then 148 is regarding the cost audit, right? The applicability, the exemption from cost audit also. Right, then one extension of company audit chapter is now we have the CARO 2020. Right, so that's again a new arrival, lot of questions coming in the exam. They're directly asking the reporting requirements under the different clauses of CARO. In the MCQ part of the paper also, so many questions coming over there regarding the CARO, right? So companies auditors report orders. So that is company audit, another aspect of your syllabus, another part of your syllabus, right? Company audit and CARO. Then apart from that, you have the audit of the items of the financial statement, right? So items of the financial statements, you have the balance sheet items and you have the profit and loss account items. Like, say you have the audit of the share capital, then the audit of the reserves and surplus, audit of the borrowing, audit of the tangible fixed assets and the intangible fixed assets. Now, for each of these items of financial statement, there are some 11 items of the balance sheet and 6 items of the profit and loss account. If you look into that chapter over there, for each of that item, one, there is some theory related to that item. Okay, how do you distinguish between capital, revenue, expenditure, or what is the definition of a current asset, or when do you recognize a current liability, or what is the definition of a contingent liability, and some theory, like what should be the controls in a company for trade receivable, or what should be the controls in the company for recording of sales transaction. So before we actually come to the audit of that item, there is some theory, some provisions which are given over there. Then after that, we actually come to the audit of that item. Again, audit is how? Assertion wise. Okay, how do you check the completeness of the tangible fixed assets? How do you check the valuation of the fixed assets? Right, so again, you understand assertion, existence, rights and obligation, completeness, valuation, allocation. So they ask, as an auditor, how will you check the valuation of inventory? As an auditor, how will you check the completeness of the inventory? It's not a question like, as an auditor, how will you check inventory? The question is very specific. It is assertion. Okay, how will you check the completeness of inventory? How will you check the valuation of inventory? Right, so assertion wise, you need to know the verification. That is how I do the checking. What are the audit procedures which are required to be performed by the auditor? And then for each item of the financial statements, you need to know the Schedule 3 disclosures. That how Schedule 3 disclosures are given for cash and cash equivalent, how Schedule 3 disclosures are given for the borrowing, how Schedule 3 disclosures are to be given for reserves and surplus for all the items. And I told you there are 11 items in the balance sheet and 6 items in the profit and loss account in the chapter of the audit of items of financial statement. For each item, you should be looking into 3 things. One, before the audit, is there any theory, some provisions over there? Then after that, each assertion, how to do the audit, and then what are the Schedule 3 disclosures, right? Then what are the Schedule 3 disclosures? So that's a huge chapter. You scared of that chapter? Does it, like intimidate you, that chapter over there? Items of financial statement, one item running into 4, 4, 5 pages sometimes over there, right? So you have the items of the financial statement. Then apart from that, you also have the chapter of the audit of the banks. Right, we have the chapter on the audit of the banks, then the audit of the cooperative societies. Right, so we also have one more type of institutional audit over there, which is the audit of the cooperative societies. Then we also have the chapter on the government audit, right? So we have the government audit, and last chapter which we have over there is the audit of the different types of the entities, right? Different types of entities like hospital, hotel, educational institution, NGO, charitable institution, local bodies, hire purchase finance company, leasing finance company, right? So you know why I discussed this with you, 27 standards, and these are all the chapters, so that in your mind you're analyzing, this though I never studied, this though I never did it. Is it? Is it that now you're able to get a mirror? Are you keeping a mirror in front of you, everybody? Ma'am is talking about these chapters. Now today I realize, oh yeah, they are all in the syllabus also. And then, many of these chapters I've not even looked into. Did you get that? There's some reason, no? Why even in a fast track class I'm holding the mirror in front of you, right? Why? So that you come to know, okay, out of that what you have probably studied and not covered it very, very properly or so. Okay, right? So that is one, the introductory part. So we can, do maximum possible of all the chapters that we can cover in this class. Apart from that, nowadays there is a concept, there is a trend of doing integrated studies, like, integrated. Even in terms of yoga, they now talk about integrated yoga. that you do some asanas in yoga, and along with those asanas, you do some pranayam also. So when you combine yoga and pranayam together, it is called as the integrated yoga, something like that, not relevant for us. But now similarly, what we have to do, no, we have to do the integrated study. Integrated study in the context of, we need to know the theory of the chapter, we need to know what are the content, we need to understand the concept. In audit, some part of the paper requires you to memorize, you cannot write in your own language, you have to write in the ICI language. You see the papers which have been called back by the students, simple. If you have written ICI words in your answer, they give you the marks. If you've written in your own language, they don't even tick over there, they move on to the next point. So if you've written ICI language, there you get like one mark. Where you've written in your own language, you get the 0 mark over there, right? You get the 0 mark, it's clear cut, you know. So one part requires what, the understanding of the concepts, right? It requires you to know the concepts, okay, these are all the concepts. Then it requires you to understand those concepts. Then some part of the paper also requires you to memorize. And now you have to memorize, like, you know, say if they are asking you regarding the what are the factors to be considered in the identification of an appropriate benchmark in SE 320, that you have to memorize. You cannot write it on your own. Maybe item of financial statement based on the knowledge you have gained, you know, based on all chapters, you can, you know, somehow write little bit on your own over there. Okay, so one part is what, theory, that is understanding, knowing the concept and all of that. And second part of it is, you know, the question and answers, right? The question and answers, okay, many a time students, what happen, you know, they know what is the answer, but they don't know, okay, when which question is asked, what answer I need to write in the exam. They know all the states of India, they know the capital of all the states, but they don't know which capital, which state. Are you getting? They don't know which state, which capital is a match the following, you know, A to D and C, B to A or something like that, right? So that is very important for you to do the practice of. Okay, okay, I know all the theory, I know all the concept, but when exam, what question come that time, what theory I need to patch over there is what we need to work upon. You understand what I'm trying to say, everyone, right? So very important, we need to know the question and answers, right? So for that, what we need to do, we need to look into the MTP, the RTP, the suggested of at least last 5 attempts, right? 5 years would be preferred, but if not 5 years, at least last 5 attempts, right? So you need to look into the MTP RTP suggested. So you know what would be my suggestion to you, you prepare a checklist like that, okay? MTP series 1 and 2, then RTP, and then after that suggested, right? Suggested, few attempts back you have the old suggested also, and you have the new syllabus also. Should a new syllabus student see the old ones? Yeah, there are many questions which are common, and sometimes ICI also forgets what is old and what is new. They ask something from the old and the new syllabus also. You find it very, very irrelevant, ignore, no? What's the big deal? Now don't make a big deal out of it over there. Right, then you've made this checklist over here, you've prepared a table for yourself. Now I'm just giving an example over there, like you write down over here May 23, and if it is available, then you write down say November 22, right? Then after that you is, and you write down say the May 22, right? Likewise, you know, you write down for the past few attempts, like December 21, like November 21, then you also had the July 21. Are you getting this? And then you keep a track that, you know, have you seen these MTPs, have you seen this RTP? Now see, I would prefer that you see it 3 times or 2 times. So if you've seen it 1 time, then tick 1. Then if you've seen second time, tick again. So again, everywhere there should be double tick. You understand that? Everywhere there should be double tick if you're planning to see it 2 times. So obviously first time what I'm going to do, I'm going to see all of it only 1 time. This full table, everything I'm going to see it 1 time. Are you getting what I'm saying? Right? All of it you're going to see it 1 time first. And then after you finish it 1 time, then you will no, so entire, if I finish seeing all of it 1 time, right? I've finished seeing all of these 1 time. Then I will start with my second round. So second round, now say may I'll use another color tick. Are you getting? Now I'll use another color tick. So then it comes, what I come to know, okay, second time also is done. You want to see a third time, now make a square around it, whatever way, which conveys to you that you've seen it again. Okay. Now, all these questions which are there in the MTP, RTP suggested, whichever author, whichever edition of the book you are studying from, or institute study material, all that content is there over there chapter wise. If you study from the audit book from which I'll be teaching in the class, obviously after each chapter, like after engagement letter, audit report chapter, all the questions which have come in the exam, in the MTP, RTP suggested are there in that book over there after the chapter. But then still, in spite of that, why do I tell you to do this? So that randomly, when a question comes in exam, are you able to answer? See, doing a chapter, doing a question, that is very preliminary. That is not preparing for CA course. So what we need to do, okay, after the chapter, so we study only. But apart from that, what we also need to study is, we need to study it at a later point of time in a random fashion, right? So all of you, will you prepare such a table and follow this format? Did you understand? You can go how many ever attempts previously, where you get it all, so many Telegram channels, in IC, website. There is information overload. And nowadays there is unlimited notes and unlimited content and unlimited video available. Out of that, we just have to select the limited ones for us and do the qualitative work and study over there. Right? Not that you study the same thing again and again and you say, oh, I know audit, oh, I know audit. Do you know audit to write in the exam? That is what is important. Okay, right? So do you understand the question and answers? You look into MTP, RTP suggested of the last 5 attempts, right? Also institute study material, whatever questions are given over there at the end. Then now you know, okay, this question, this answer I need to write. Okay, this question, this answer. But then now actually writing is also very important. So what we also need to do is the writing practice. Take the effort, take the, what you say, the trouble of writing the answers actually as if you're writing in the exam. Preparing notes is different. Writing an answer for the exam is different. So you need to work on your speed. You need to work on your presentation, your neatness, your tidiness in the paper. Right, so whatever question, I know the concept. I know when this concept question is asked, this concept I need to write. And then you're also good with your writing practice, right? You write very good, neat, quick answers in the exam. And apart from that, you have 2 more, what you say, demons over there. They are not demons, actually, they are very friendly over there. What 2 points you have over there? One, the correct, incorrect. Right, question number 1, which is compulsory, it has, answer any 7 out of 8 questions over there, right? So 7 twos are 14. Right, so 14 marks of your question number 1 in the theory part of the paper. So one set of preparation you need to do is for the correct, incorrect. And then obviously another very important set of preparation which you need to do is for the MCQ part of the paper. Why? Because that is 30 marks of the paper. Right, so 30 marks of the paper coming from the MCQ, 14 marks of the paper coming from the correct, incorrect. And remaining 56 marks, I have all these other theory questions coming in the exam. You follow what I say, everybody? Are you getting a hang of what I'm trying to tell you over here? Right, so then that's what. Then MCQs also, again, MCQ also same tracker. In suggested, there are no MCQs. But in MTP, RTP, are there MCQs over there? Yes. Apart from that, institute, have they issued a booklet? Right, an integrated case scenario and general MCQ booklet over there. So that much is enough. Which MCQs are the best ones for you to solve? The one which have been given by ICAI, right? Those are the best MCQs which you could be solving. Right, so are you getting, everyone? Integrated learning, somehow stop the greediness of doing 400, 500, 800 concepts and questions over there. Even though if you know 300, you should know all of the concept. But even though if you don't know a few of them, that is okay. But at least what you know, you are able to write, you are able to identify the correct question. That is more important, no? You know 800 concepts, you don't even know one concept how to write. You don't know which question, what concept to write. What is the use? You understand? No, in that case, what is happening? You're only doing the hard work. You're not doing the smart work. And what is required is a culmination, an integration of hard work and smart work. Only smart work? No, it will not serve. That will be over smartness if you do only smart work. So you have to go for a combination of the hard work and also the smart work, right? You should be feeling, what you say, the progress in your learning. You should be seeing the confidence in your preparation for the subject. When you prepared for your CPT foundation, that was a different ball game. Now when you come to intermediate, you come to know the heat of the CA course, the difficulty and the complexity of the CA course. Now if you get it right, obviously CA final is going to be more comfortable for you. If you set, so that, whatever struggle you're going through right now, if you can able to adjust yourself, match yourself with the requirements of ICAI, things will become more better for you. Right? So don't move into circles. Obviously, if you keep on moving into circle, you'll keep on reaching into the same place again and again. You'll say, oh my God, I'm writing few attempts. Every attempt I'm getting marks in the same range. Every attempt, same thing is happening. When I write the mock test paper or the test series, there I get very good marks. But when I write institute exam, I don't get marks. So obviously, mock test paper and institute exam, there is no comparison over there. In a mock test paper, you might get 70, 80, 120 also. But institute exam, that doesn't happen. And there it is, you need to, and what type of questions come over there? Oh my God. You say, "Okay, where did you find this question from? Where has it come from? And like what corner of the book the question comes from?" Many of the questions to the students, they say it is out of syllabus. Why? Because their definition of syllabus is very restricted. No. So for them, many of the students, they say, "Ma'am, they don't ask anything, they ask something elsewhere only." No, because you don't study, you find it out of syllabus. If you study it, you find it within the syllabus itself. Are you getting it right? Okay. Right. So what will you do? Will you always keep a thermometer check with you that whether I'm moving further in my study, is my confidence increasing towards the preparation of the subject, or am I just moving in round and round over there? Right, so you have to be very smart, and this smartness will come. I'm telling you 110% when you do these MTP, RTP practice. Then one day what to do, say 20, 25 days of audit study is over. Then pick up one MTP randomly, say November 21, MTP series 2, and take out 3 hours time. And then, now it's you just not going to write the MCQ part, say just the theory part. So take out 2 hours time or something and start solving the entire paper. Like that will be a confidence booster. That will be like, and it's so nice. You say, "Ma'am, I don't have the confidence. I'm not able to write." It's so nice. You realize your mistakes. So better than going into the exam hall and realizing your mistake, that you realize it in your preparation only. So do the things which you avoid trying to do. Very simple, I'm telling you. You try to find out a easy formula, a simple way, "I'll do company audit. I like company audit. Ma'am, I like the engagement letter audit report." Now, who asked you over here what you like and what you don't like? Is this, have you gone for any, what do you say, so a selection of a dress or something for you, okay, where you like or you don't like? How much ever you are in love with advanced accounts, right? How much ever you hate, what do you say, audit as a theory subject over there? No requirement to hate, no requirement to like. Why to even think that way? And now, life, your target, your goal setting has to be very, very simple. What has to be the target? Okay, minimum 40, whether I like it or hate it. And then obviously only with 40, 40, 40, 40, nothing happens in life. 160 out of 200, nowhere. And then nothing happens. Rather, students, they get stuck at 197 out of 200. This is cruel, no? This is the cruelty of the CA course. You're like, look at 3 marks, you realize, the value of 3 marks also over there. Like, when you get 59 in a subject and you have to study the subject again, deadly, dreadily. And I agree, like I'm very empathetic for you for that matter. See, when you get 23 in a subject and you need to study it again, you deserve. You deserve to study the subject again. Boss, you got 23 out of 100. But when you get like 59 out of 100, and just because one subject you got 38, and that is why your group did not clear, and then because 59, that 1 mark, the exemption also did not come. And then when you have to study the subject again, now that's the real challenge thrown to you by the CA course. And then again, 59 came in that attempt. You don't know whether it will come again or not. There is no confidence now. For me, the what I get 59, so no big deal. No, that it's just your luck of what questions came and you prepared well. Not necessary that history will be repeated. History might change also. And then the geography might be different now over there in the questions asked in the exam. So this is nothing to scare you. This is nothing to, get some, what you say, very anxious about it. This is just to be aware that this is the reality of the CA course. This is how the course has been structured. Right? So we need to, from our side, make it very difficult for us to fail. You say, "Okay, I have studied only in such a manner, okay, if anybody wants to make, fail me also, they can't do it. They can't fulfill their wish." And it's like they say, how much ever you want to make me cry, I will not cry. I'm that strong and hard that way. So similarly, you prepare only in such a way that, anything more than 50, 60, 70, 80, 90, welcome. Who has said no? Anything more than 200 or 400, who said no? It's okay, even though if I get like a 650 out of 800, is it good? Very good. 400 out of 800 is what? Have you finished your costing classes? Right, your costing classes over there. 400 out of 800 is what? Economic order quantity, minimum order quantity. And this is like the safety margin and a minimum order quantity. Anything more coming, no problem, let it come, how much ever it wants to come. But we can't go below this level. Otherwise, our production will come to a standstill over there. You understand? No, otherwise, again, that's, CA final promotion gets deleted in that case. And it gets postponed in that case. Okay, right? So, all good, everyone? Yes, so now let's begin with our discussion for today, right? So every day we will be having three sessions. First session for around 2.5 hour to 3 hour, then a session of 1.5 to 2 hour, and then again a third session over there. Each session I'll try to take different topics and chapters so that we'll not go one topic only. We'll cover different chapters because it is a fast track class, right? One of the days I'll also love to keep it only for having a lot of a brainstorming session on the MCQs. Then one of the day we'll keep a session for correct and correct, but that we correct and MCQ, but that we'll do it after we finish 1 or 2 days of the class. First, let us at least warm up and again gel with the subject again, and then after that we can give the time. Right, as I teach in the class, I'll be using the book which is there with me, right? The latest edition of the audit book. It's not necessary for you to have this book. Students say that, ma'am, I have an earlier edition of the book. Obviously you would have an earlier edition, and because you have an earlier edition, it can't happen that I stop coming up with a new edition. You understand that? No. So that little bit of gap is always going to be there. So whichever author, whichever edition of the book you have, it is absolutely fine because you're doing a fast track class over there. If you're only following the study material of ICAI, that is also absolutely fine, right? But just when I'm teaching in the class, even though not that everything I write has to be in your book, but little bit, keep on doing a marking of what I discussed as important, or what are the questions or the concepts that I'm doing over there, so that right now, otherwise it should not happen, no, that you just listen to me and later on you forget about it. So you should have some record of what I'm talking about over here. That is why I want you to keep on writing something in the class as I'm discussing with you, right? I'll be giving you a little bit of the notes also, but those notes as such we don't require for the class. Those are for your extra practice purpose, right? So by tomorrow we'll give you those notes also regarding a few past exam questions, RTPs, and all the RTPs, MTPs over there. Right, so all good, everyone? Will you keep writing with me? And any point of time, any concept, any topic, anything, any particular topic, you want me to take it in detail, okay? I may not take it, it being a fast track class, but if you think that, ma'am, please take it, so please come and tell me. Don't tell your friend cannot teach you, come and tell me. And then come and tell me when the class is going on, don't regret it after the class gets over, okay, oh, I don't know this. Then you have to ensure, no, you have come to a class, you've enrolled for a class, so you have to ensure that whatever you have missed out in the preparation of the subject, or what you think you need some guidance over there, you should be covering that particular, yes, that topic should be covered, right? So can you tell me which chapters are you most scared of? Standards on auditing, okay. Internal control, oh my god, because there is significant risk, non-routine transactions and all of that, okay. Audit of items of financial statements. All of you have decided one chapter to say, so that one is saying standards, one is saying internal control, one saying items of financial statement. It's deadly, no? The chapter over there, items of financial statement, and does it come in the exam? One question only? Your paper only one question came? 2 to 3 questions come in the exam. Around, 12 to 14 marks come from the chapter of items of financial statement generally. You never know with ICI. Last time they asked the case laws. Case laws in the context of case study. Hmm. Analytical, that one question over there regarding GST and the sugar mill and that one. Okay, right? So, yeah, those could be a few, but there could have been some direct questions also in the paper, right? Some direct and some case studies where again you require a lot of question and answer practice. Okay, yes, which other chapter? Yes, which other? I'm not even assuming that you know the chapter. I've already told you all the chapters over here. Right, all these chapters have I mentioned. So standards, you made a big statement over there. Standards is 27 standards over there. Okay, yes, what else? Which? So what about it? Okay, okay, right, so that comes in the basic concepts in auditing, fine. Yes, so you've told me nobody wants to tell me any other chapter that they are scared of. You're not scared of any other chapter, okay. Which chapters do you really like? Company audit, Caro, okay. Audit sampling, bank audit. Okay, bank audit again very super important. It's a good deal to study that particular chapter because one question is coming in the exam from the chapter of bank audit also. Okay. Yes, the special entities, audit of different, but in special entities also, did you see the level of the detailing in the question? They are asking the audit of the hotel. In the audit of the hotel, they are not asking what are the audit procedures for, or points to be considered in the audit of hotel. They are asking regarding what are the points to be kept into mind while looking into the verification of the inventory of a hotel, right? So verification of inventory or the room sales of a hotel, right? So that's again a very specific question, or receipts of a cinema hall. So again very detailed or very specific questions coming over there. Okay. Yeah, which are mentioned in the study material. So little bit, huh. No, 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 no. I say, ideally speaking, they should be allowing, but that is what they don't give the marks for, which is a harsh reality, which we need to accept and which we need to acknowledge and know it. Okay, that's what I said. Now, when you write, when they see the words which are there in the study material, they give you the marks. You write anything on your own, they don't give you the marks. So, at least you should know the keywords over there and then the sentence structure and the formation that you can, just make it, the cement, the brick should be of ICI, cement can be yours. So that is how you can, construct the answers over there. Okay, right? So the all your practical knowledge, that is like, a backup plan. If you don't know what is there in the study material or something, then you know what is there in the ICI language, then you write down as per your own language or something over there. But then you realized it with your own experience, that when I write it with my own experience and my practical knowledge, I'm not getting the marks in the exam. Right, so that is how it is. Okay. At an audit, it turns out to be a monster, a demon. I should not be saying that because I myself am teaching that subject. But it actually happens to be one of the reason for not clearing group 2. Like I've been teaching the subject since 2009, so it's been a long journey for me with the subject and a long time of association with the students. So that's where, they miss out on a few chapters, they miss out on a few concepts, they don't do the writing practice. So that is why now what I do on the first day of the class only, I throw so much of light on all of you. And okay, you have to do the integrated learning. You have to cover all of these. You have to look into the MCQs. You have to prepare for the correct and correct. You need to prepare this chart and prepare for the exams. On the first day, in the first 1 hour of the class only, I'm telling all of this to you. Right? Why? Because this is what is the formula, which is or the recipe, which is required for preparation for the subject of audit. Right? So all good, everyone? All set? Right? All of you with me? Committed, devoted, dedicated for the next entire duration of the class? Right? So unless and until there is a technical require, some glitch over there, we start on time, we don't finish on time, we start on time, that is for sure. Okay, we can't finish on time, okay, because without that we won't be able to complete. Right? Little bit of a LA over an extra time might be there in the class. But yes, we'll try to cover, okay. And whenever you study on your own also, no, whenever you study on your own, you studied like for 2 hours, and then you think, oh my God, like I've studied quite a lot. I'm telling you a thumb rule. You understand? Whenever say you sat for 1 hour and you sat for 2 hours and like it's come till year or year, I've studied so much. I'm telling you a thumb rule. That means you should take it that you are only halfway through. That means you should take it that you have studied only for half of the time for which you should have studied. So if you've studied for 2 hours and then you start getting that saturated feel, that means you are expected to study for more 2 hours. Right, so whenever you think you are done, that means you are just halfway through. You need to study for more, double the time of what you have studied so far. And please extend, do put in the more effort right now, rather than 10, 15 days before the day of the exam. And the panic button, and then all subjects, they come roaring the clients towards you. Even advance account calls you, and EISSM, and all subjects, they keep on, attacking you. And you feel scared, you get like whatever you know, also you don't know then. Right, so then those lions are going to come as the date of the exam comes near. They are going to become more ferocious and going to be approaching you over there, trying to attack you. But then you have to be okay, like keep safe distance, be away, don't try to scare me. I've prepared quite well from the beginning itself. Right, so right now they say, the ICI logo also says, Yesha Supteshu Jagarti. That means when the world sleeps, we awake. Right, so right now when everybody is probably taking it very lightly or not doing it, or maybe they are also doing it very properly, anybody else, so you also do it very properly right now. And the single motivating factor of studying well right now is that after 6 months you won't have to study it again. That's the clear, it's like the, what do you say, the carrot which is shown to you over there, the motivation, or, the attraction for you over there. Ki, oh my God, I'll not have to open these books and not see this content and all of this again over there. Right? So, all good, everyone? Right, so let's begin our class with Caro 2020, and then after that we come to engagement letter audit report, and then one of the other chapters for today. And then quite quickly as possible, I'll be going through all the possible chapters over there. I'll be moving from one chapter to another chapter. You can't say, ma'am, you were teaching chapter of engagement letter where you went to company audit, you were discussing company audit, you went to local body chapter. So I am going to go. So, roller coaster ride. One, you can be sitting in a train, coach by coach, going from junction to junction. Another, have you seen in any amusement park the roller coaster ride? Right? Have you seen the roller coaster ride? How they go, they completely turn you down and all, and it all of a sudden goes like that. So then, why that roller coaster ride? Because only then you will be well prepared for the subject. Right? So, but without compromising on the content, without compromising on the quality, without you feeling lost. I don't want you to feel lost. I don't want you to feel timid, but I want you to feel more confident. I want you to get the thrill of the subject. You understand, no? When you sit in a roller coaster ride, or when you sit in a small snail type of a vehicle, snail, you say, what, this is for 2 3 year old kid, they sit in that and they're happy sitting in that, vehicle, that particular amusement ride. But as an elder person, you want to sit in a more thrilling, what do you say, way over there. So I will be moving from topics to topics, not day one. So obviously, as we proceed further, you'll see the more the momentum of the class moving over there. Right? Please make it a point that you come to me and you talk to me about all your concerns. I'm here only for you. Right? I'm here only for teaching the subject of audit to you, and I'll be so damn happy if I can contribute to your success for the subject of audit, or for any matter, for your clearing your intermediate exams, in any way. Okay, this class puts in some positivity into you, or gives you the right direction, or whatever was missing for the preparation of the subject. Okay, right. So with that, let's come to the chapter of the CARO 2020, the Company's Auditor's Report Order 2020. Right? It's an additional reporting requirement which has been specified by the central government under section 143(11) of the Companies Act 2013. Right? So 143 is what? Rights and duties of company auditor. So one of the duty of the company auditor is to report on the additional matters specified by the CG. And under this power given to the central government has issued the CARO. What is CARO? Companies Auditors Report Order 2020. Okay, right. And now in this CARO over here, we have two aspects to be considered. One, what is the applicability of CARO 2020? That is one area where question comes in the exam. And the second area are the reporting clauses of CARO 2020. Right? What are the reporting? What reporting is required to be done by the auditor under CARO 2020? Right? What are the reporting requirements? Thankfully, at intermediate level, they are not asking more of the audit procedures or the verification or the case study. They are simply asking what are the reporting requirements, right? Like, what are the reporting requirement? What is it that the auditor needs to report in CARO? Like, if all these questions you see over here are regarding the applicability of CARO, then after that you see again the question on the applicability of CARO, and then reporting requirements under clause 1, reporting requirements under clause 1 and 2, right? Reporting requirements for inventory working capital, right? Then also the loans, investments, guarantee, security, deposits from public. Then clause 6 is again the cost records, clause 7 and 9, right? Then clause 10, clause 11, right? 9 and 11, 10 and 9 and 11. Are you getting? These are like the direct questions coming from the CARO. And in the MCQ part of the paper also, they are asking lot of questions regarding CARO. CARO being new, somehow I think that they can put an entire 10-mark question, an integrated case study only on CARO. Right? Is that also possible? Right, that they put an entire 10-mark question in the integrated case scenario regarding CARO or something. Okay, so first what we will look into is the applicability of CARO. So now say you're doing the audit of a banking company, insurance company, Section 8 company, listed company, public company, private company. For all companies of which you are doing the audit, do you need to do the CARO reporting? For all companies, so you're doing the audit of an insurance company, do you need to do the Caro reporting, or a one person company or a small company? No, we have the applicability of Caro. And what does the applicability of Caro say? That Caro shall apply to every company. Right, so is it applicable to every company? Yes, including a foreign company. So foreign company audit you are doing, is Caro reporting applicable? Yes. Right, except which company Caro reporting not applicable. So you have 5 companies over there where compulsory Caro not applicable. Right, banking company, insurance company, the section 8 company, one person company, and the small company. Right, to these 5 companies Caro reporting never ever applicable. Which are the 5 companies? Banking company, insurance company, section 8 company, the not for profit company, one person company, and the smaller company. And for a private limited company, Caro not applicable, subject to certain conditions. So private limited, it is like it may be applicable, it may not be applicable. See, public company, Caro always applicable. Foreign company, Caro always applicable. These 5 company, Caro never applicable. And private limited company, it is like may be applicable or may not be applicable. Right, so private limited company subject to certain conditions. Are you all with me? Right, private limited company subject to certain conditions. And what are the conditions for a private limited company? It says a private limited company not being a subsidiary or a holding of a public company, not being a subsidiary or a holding of a public company. So say there is a private limited, right? Say there is a private limited, and a private limited holding company is a public company, say B limited. So is Caro applicable to a private limited? Yes, because holding company is a public company. So a private limited is a deemed public company type, right? Or say B private limited, and B private limited, their subsidiary is a public company, say C limited. Their subsidiary is a public company. So now B private limited is a holding of a public company. B private limited is the holding of a public company. Again, in that case, will Caro be applicable to B private limited? Yes, it will be applicable. Of a private company, if they are above or if below them, if there is a public company, to that private company Caro always applicable. And a private limited company, either when they are holding as a public company or they are subsidiary is a public company, to that private limited company Caro always applicable. So now when do I need to check for the other condition? When up or down of a private limited company there is no public company, right? So up or down of a private limited company, so neither they are holding as a public company and neither they are subsidiary is a public company, then Caro reporting we need to check the 3 conditions. Now what are the 3 conditions over there? It says paid up share capital and reserves and surplus not exceeding 1 crore as on the balance sheet date, right? To paid up share capital and reserves and surplus. Then total borrowings from banks, financial institution not exceeding 1 crore at any point of time during the year. And total revenue as disclosed in schedule 3, including the revenue from discontinuing operations not exceeding 10 crore during the financial year. Right, so paid up share capital and reserves and surplus not exceeding 1 crore, and a total borrowings from banks, financial institutions not exceeding 1 crore, and total revenue as disclosed in schedule 3, including the revenue from the discontinuing operations not exceeding 10 crore. Right, so now say let me take the example of D private limited. And a D private limited, up or down there is no public company. So up or down, if there is public company, what we say? Caro applicable. Then I don't need to check for 1 crore, 1 crore and 10 crore. But now D private limited, up down, no public company. How much paid up share capital and reserves and surplus? Say 90 lakh. How much borrowings from banks, financial institutions? Say 80 lakh. How much revenue as disclosed in schedule 3? Say 12 crore. Is Caro applicable to D private limited? Is Caro applicable? Yes. One of the limit exceeded and Caro becomes applicable to a private limited company. Right. So for Caro not to be applicable to a private limited company, now say E private limited, how much is paid up share capital, reserves and surplus? 90 lakh. Say how much is total borrowing? 80 lakh. How much is revenue? 9 crore. Is Caro applicable to E private limited? No, Caro not applicable. Why? Because all the three conditions have been cumulatively satisfied. Right? From all three dimensions, it should be within the limit. 1 crore, 1 crore and 10 crore. Any one of the dimension, the limit exceeded and Caro becomes applicable to a private limited company. Right? So that's the applicability of Caro. What is the applicability? Caro shall apply to every company, including a foreign company, except these five company. Caro never applicable. Banking, insurance, section 8, one person and small company, and a private limited company not being a subsidiary or a holding of a public company, and then 1 crore, 1 crore and 10 crore. Right? That's the applicability of Caro for a applicability of Caro for the private limited company, the 1 crore, 1 crore and the 10 crore. Right. So what are the correct and incorrect over here? Caro does not apply to a foreign company. Incorrect. Right. Caro applies to all companies, including the foreign companies, except banking, insurance, section 8, one person small and the private limited company subject to certain condition. Provisions of Caro as amended will apply to entities which have been established under section 8. No, section 8 company, again Caro does not apply. Provision of Caro is not applicable to ABC Private Limited, a subsidiary of XYZ Limited, a public company. Yes, when you read this much part of the story, only what you come to know, Caro applicable. Do I need to check the other conditions of 50 lakh, 90 lakh and 5 crore? No, why? Because it's a subsidiary of a public company, means holding company of this private limited company is a public company. So that yes, ABC Private Limited is a deemed public company. So Caro always applicable. So it says Caro specifically exempts a private limited company, but which one? Not being a subsidiary or a holding of a public company, and then 1 crore, 1 crore and the 10 crore. Are you getting that? 1 crore, 1 crore and the 10 crore. From the above, it is clear that ABC Private Limited is a subsidiary of XYZ and hence not exempt from Caro, although it is satisfying the conditions that allow exemption to a private limited company, which is not a subsidiary or a holding of a public company. Right. So now this is what I mean to say. Okay, do you know the theory of what is the applicability of Caro? Yes. But are you able to write down the answer if a question comes in the exam? Right. So you know the theory, but are you able to? Where you want here? Yeah. Right. So what you need to know is whether you're able to write down the answer. So now what is the next question? Caro 2020 will not apply to a private company whose paid up capital reserves are not more than 50 lakh. Yes, not more than 50 lakh. What is the limit over there? 1 crore. But you have to assume that the other two conditions are also fulfilled. Now what they write, thus the statement is correct, assuming that all other conditions relating to borrowings and turnover are also satisfied. So this, when you come to know, when you actually do the question and answer practice. So one, you look into the MTP, RTP or the question bank, and you also do the writing practice, wherein you actually start writing down the answers over there. Right? Getting everyone? Yes. Is Caro applicable to branch office? Caro applicable to branch audits? If applicable to head office, also applicable to the branch office, right? So if applicable to HO, then also applicable to the branches, right? So that's the applicability of Caro for the branches. Okay, right. And then now coming to the reporting clauses of Caro 2020, right? Now then coming to the reporting clauses of Caro 2020. How many clauses of reporting in Caro 2020? Right, you have the 21 clauses of reporting. So what we are going to do, we are going to remember a story over there. Right, we are going to remember a story because Caro is very scoring and coming lot in the exam. We'll make a story over there, then see all the clauses of reporting under Caro. Right, so what is the story we need to remember? All of you can keep writing with me. Please inform the landlord and the landlady. Right, so say you are staying in a PG and now you have to inform your landlord and the landlady. So please inform landlord and landlady regarding what? Your deposits, your records, your dues, your undisclosed income. Right, your dues, your undisclosed income, your repayments and issue proceeds. Right, so please inform landlord and landlady regarding your deposits, records, dues, undisclosed income, repayments and issue proceeds. Please inform to whom? Landlord and landlady. What do inform to them? Regarding your deposits, records, dues, undisclosed income, repayments and the issue proceeds. Okay. Then it is like, ma'am, why should I inform the landlord and landlady regarding all of this? Because a fraud was done by Nidhi. Right? Why to inform all of this? Because a fraud was done by Nidhi. Who was Nidhi? She was a related party. So why to inform all of this? Because a fraud was done by Nidhi. Who was Nidhi? She was a related party. Who found out that Nidhi did a fraud? It says internal auditor found out. What did she do? She entered into a non-cash transaction without registration with the RBI. What did Nidhi do? She entered into a non-cash transaction without registration with the RBI. Who found out? Internal auditor. Right, then this is not a clause, but we just remember, okay, now there is a lot of bad news for the company. What is the bad news for the company? Company has incurred the cash losses. Company has incurred cash losses. Auditor says, oh, my audit fee may not be received. So there is the resignation of the statutory auditors. And also there is, say, the material uncertainty. What is MT? Material uncertainty regarding the ability to meet the liabilities. Right? Material uncertainty regarding the ability to meet the liabilities. And then after that we have the 2 points of C. What are the 2 points of C over there? CSR, that is corporate social responsibility, and CFS. What is CFS? Consolidated financial statements. Right, the consolidated financial statements. Right, so what story have we written? Please inform the landlord and landlady regarding deposits, records, dues, undisclosed income, repayments and issue proceeds. Why to inform? Because a fraud was done by Nidhi. Who is Nidhi? Related party. Who found out? Internal auditor. What did she do? She entered into a non-cash transaction without registration with the RBI. Then there is a lot of bad news for the company. What is the bad news? Company has incurred the cash losses. There is resignation of the auditors. There is material uncertainty regarding the ability to meet the liabilities. And then you have the 2 points of C. What are the 2 points of C? CSR and CFS. Okay, right. So now coming to clause 1. What is clause 1? Yes, clause 1, which is property, plant, equipment and intangible assets. Right, property, plant, equipment and the intangible assets. Right, then clause 2, which is regarding the inventory and working capital. Right, inventory, and then you also have the working capital. Right, then clause 3, clause 4, both is LL. Clause 3, clause 4, both is LL. What is LL? LIGS, LIGS. What is LIGS? Loans, investments, guarantee, security. Loans, investments, guarantee, security. Right? So please inform landlord and landlady. So we have PILL. P stands for property, plant, equipment, intangible assets. I stands for inventory, working capital. L stands for loans, investments, guarantee, security. Next L also stands for loans, investments, guarantees and the securities. Okay, right. Then after that, clause 5, which is regarding deposits from the public. So it's regarding public deposits. Right, then clause 6, which is regarding the cost records. So first you say cost and then you say records. Right, then clause 7, which is regarding the statutory dues. So again, first you say statutory and then you say the dues. Right, then clause 8, which is regarding the undisclosed income. Clause 9, which is regarding the repayment of the loans or borrowings. Clause 9, which is regarding the repayment of the loans or borrowings, and 10 is regarding the issue proceeds. Are you all with me? Clause 5, deposits from public. Clause 6, cost records. Clause 7, statutory dues. Clause 8, undisclosed income. Clause 9, repayment of loans or borrowings. And Clause 10, issue proceeds. You know, that is the reason we cannot change the sequence of telling the things to uncle and auntie. Because if we change the sequence, then our clause numbers will move. So can you first tell uncle and auntie regarding your records and then regarding your deposits? No. First you have to tell them about your deposits, then your records, then your dues, then your undisclosed income, and then repayments and the issue proceeds. You cannot change the sequence. If you change the sequence, clause number will move. Okay, right. Then why to tell all of this to uncle and auntie? Because a fraud was done by Nidhi. So clause 11 is fraud. Right. Clause 12 is Nidhi company. Clause 13 is related parties. right? 11, fraud. 12, Nidhi company. 13 is related parties. 14 is internal audit. 15 is non-cash transaction. 16 is registration with the RBI. So now not much writing, just whatever is the story, just have to add the number before that. Are you all with me? Right, so fraud, Nidhi aage, ahead of Nidhi, what did I add? Company. Right, then related party, then internal audit, non-cash transaction registration with RBI, that is 14, 15 and 16. Then what is 17? Cash losses. 18, resignation of the auditors. 19, material uncertainty regarding the ability to meet the liabilities. 20, CSR, and 21, CFS. Simple. These are the titles of the 21, the names of the 21 clauses of Caro. Do you know the story, everyone? Story only first line, I think we need little manipulation over there. Okay, story is different. Please inform landlord, landlady. But PILL, and P stands for property, plant, equipment, intangible assets. I stands for inventory, working capital. L stands for loans, investments, guarantee, security. Second L also stands for loans, investments, guarantee, security. First L tells you to give the details of transaction. Second L tells you to check the compliance with section 185 and 186 of the Companies Act. So though it is LIGS, the reporting under 3 and 4 is different. The reporting under, are you all with me? Right, 3 and 4 is different. Then what does it say? After please inform landlord and landlady, what are the next points over there regarding your deposits, your records, your dues, undisclosed income, and the repayments and the issue proceeds. Why? Because the fraud was done by Nidhi, who was a related party. Internal auditor found out that she entered into a non-cash transaction without registration with the RBI. Bad news is no clause, huh? Please don't add on your own. Bad news, just a reminder for us. Okay, there is bad news. So cash losses, resignation of statutory auditors, material uncertainty regarding the ability to meet the liabilities, and then you have the CSR and the CFS. Right? Clear to everyone? Okay, so have I written it in the, what do you say, horizontal format over here? Have we written the story over here? Now what we will do, same story once again. Now we will write it in the vertical format. What is vertical format? Clause 1 is what? Property, plant, equipment, intangible assets. What is clause 2? Inventory and the working capital. What is clause 3? LIGS, and again clause 4 is also what? LIGS. Then what is clause 5? Deposits from the public. Clause 6? Cost records. Are you with me? You understand what I'm doing? I'm making a list now. Then 7 is regarding the statutory dues, right? Statutory dues. 8 is regarding the undisclosed income. 8 is regarding the undisclosed income. 9 is regarding the, right, the repayments of the loans or borrowings, right? Loans and borrowings. 10 is regarding the issue proceeds, right? 10 is regarding the issue proceeds. Are you with me? Right, then after that 11 is fraud, right? 11, clause 11 is regarding the fraud, right? 12 is regarding the Nidhi company, because fraud was done by Nidhi. Who was Nidhi? Related party. So fraud, Nidhi and the related party. Then after that you have the clause 14. 14 is what? Internal auditor found out. What did he find out? That she has entered into a non-cash transaction without registration with the RBI, right? She has entered into a non-cash transaction without registration with the RBI. Then after that, what are the next 3 bad news over there? Company has incurred the cash losses. Then there is the resignation of the statutory auditors, right? There is the resignation of the statutory auditors. Then there is the material uncertainty regarding the ability to meet the liabilities, right? Material uncertainty regarding the ability to meet the liabilities. And then you have 20, which is CSR, and 21, which is regarding the CFS, right? 20 and 21. Okay, but there's a reason why I'm writing it again, because I'll tell you what type of questions are coming in the MCQ part of the paper, and so on, correct, incorrect, right? Do you know? And how do you write the clauses of Caro? Small Roman numbers. Did you see 1 to 21? I'm writing it in the small Roman numbers. All the clauses of Caro are given where? They are given in para 3 of Caro 2020. So if it is clause 1, I write as per clause 1 of para 3 because all the clauses are given in the para 3 of CARO 2020. Right, then whatever is the reporting requirement under that clause. Are you getting? Right, okay. Now everybody look at the screen. Are you all with me? Right, now you need to look at the screen over there. Okay, under clause 1, what is clause 1? Property, plant, equipment, intangible assets, you have small a. Under small a, you have capital A, capital B, and then you have B, C, D, and E. That means what? There is one A. In one A, there is capital A, capital B. Then there is one B. Then there is one C. Then there is one D. And then there is one E. Right, so if you want to see it in the clause over here, what is it? Clause 1, property, plant, equipment. In that you have clause 1, A. In A, actually this should be capital A and capital B. Then the small b, small c. Then after that the D and the E. Right, then the D and the E. Why we need to know it? Because they say whether any revaluation has been done for property, plant, equipment during the year. Whether any revaluation of the, whether any property, plant, equipment, intangible assets or both have been revalued during the year, the auditor needs to report under clause, yes, 1C of CARO 2020, or the auditor needs to report under clause 1D of CARO 2020. Yes, that's B option. C option, the auditor needs to report under clause 2C of CARO 2020, or the auditor needs to report under clause 2D of CARO 2020. So one, you know that this is not clause 2 because clause 2 is inventory working capital. So C and D is out. Now you need to know, is it 1C or is it 1D? And where you need to report whether any property, plant, equipment, including right of use assets have been revalued during the year. So then that comes under clause 1D, right? So what is going to be the correct option over there? B, right? Clause 1D of para 3 of CARO 2020. Right, then another question which they asked over there, okay, where any revaluation has been done during the year of the property, plant, equipment, what details are required to be given? What does it say? If there is, for each class of PPE, for each class, you understand, land and building is one class, plant, furniture, fixture is one class, plant and machine, is one class over there, furniture, fixture. So what does it say? For each class, if there is a change of 10% or more, it is to be given on a net basis, or if there is a change percent of 5% or more, it is to be given on a net basis, or if there is a change of 10% or more, whether it is to be given on a gross basis, or if there is a change of 5% or more, is it to be given on a net basis? Right, so again, now what we need to know, changes of 10% or more. Are you all with me? Changes of 10% or more. So now 5%, 5% out. I know, sorry, this is 5% on a gross basis. That option I wanted to write is 5% on a gross basis. So anyways, 5% is out. What is in 10%? But in 10%, you need to know whether it is on a net basis or whether it is on the gross basis. So now we know it is the net basis. So that is the fine print, the reading which you need to do for each of the clause of the CARO. Right, this is not my imagination. These are these MCQs which have been created by ICAI only. I have not created, to scare you further over there. This is what has been done by ICAI. So you understand why I am writing this over here. And okay, under 1 you have A, capital A, B, C, D, E. Right, then under 2 we have the 2A and 2B, 2 small a, small b. Right, then under 3 we have small a, capital B, and then after that the B, C, D, E, and F. So 3 is a huge one. You have A, capital B, then B, C, D, E, and F. 4, 5, 6 are direct. What do you mean by direct? There is no AB over there. Right, like if I look at 4, it is simple direct. There is no AB over there. Are you understanding? 5 is also direct. 6 is also direct. In 7, again I have 7, A and B. Are you understanding what is happening? Right, so 5, 6, 7, 4, 5, 6 is also a clause, but only what? There is no AB or no subclassification over there. It is directly a clause over there. Are you understanding? So, but 7 we have A and B. 8 is again direct. 9 again we have A, B, C, D, E, F. Right, for 9 again what we have is the A, B, C, D, E, F. Right, 10 again is A and B. Right, 10 is again A and B. 11 is A, B, and C. Right, 11 is A, B, and C. Right, 12 is again A, B, C. 13 is direct. 13, there is no A, B, C, D. Right? 13, there is no A, B, C, D. Right? Are you with me? 9, A, B, C, D, E, F. 10, A, B. 11, A, B, C. 12, A, B, C. 13, nothing over there. 14, A, B. 15, direct. 16, A, B, C, D. Right? 16, there is A, B, C, D. Right? Then 6, 17, 18, 19, direct. 17, 18, 19, direct. 20, there is A and B, and 21 is again direct. Right? 21 is again direct. So actually, likewise, if you go to see, there are how many clauses in Caro? 21 clauses. But if I take the total of all A, B, C, D, E, F, it comes to 47 points of reporting in Caro 2020. If I take all this, clause 1 has 5 points over there, clause 2 has 2 points over there, 3 has 6 points over there. So if I take all of these together, then it is coming to 47 clauses of reporting in Caro 2020. After later on, when you go home, you can take the total and check whether all this A, B, C, D put together, is it coming to the 47 clauses of reporting in Caro 2020. Are you getting that? Right? And is it important? Yeah. So now in the exam, what question did we see in the question bank over there? Right? What questions have we seen in the question bank over there? Like they are asking clause 1. If they ask clause 1, A, capital A, capital B, B, C, D, E, all of it is required to be written. If they ask you clause 9 is having A, B, C, D, E, F, right? So that entire points are required to be written. Clause 10, again you have to write the A and B. 11, you have to write down it's regarding fraud. So you have to write down the A, B, C over there, right? And again, November 2021, they asked regarding clause 10. So clause 10, again, you have to write down the A and the B. Okay. Yeah, I'll come. Here, this one. Okay. Right? All of you getting? Right? And again, these you have to learn them by heart. Right? There is no option. You cannot decide. Central government has decided what reporting is to be done. A student cannot decide sitting in the exam hall, okay, what reporting they are going to do over there. Right, so let's have a quick discussion of these clauses because it's very important. Lot of questions coming in the exam, and thankfully they only have over here for us is the reporting requirement. We don't have the audit procedures, we don't have the case study over there. CA final after the chapter of Caro 2020, we have a 15 pages question bank over there. Right, 15 pages question bank. Why? Because so many case studies coming in the exam regarding the audit procedure. Your question bank is so small because they just ask you the reporting requirements under the clause. Okay, right? So do you know the story? What's the story? Please inform the landlord and the landlady regarding your deposits, records, dues, undisclosed income, repayment and the issue proceeds. Why? Because the fraud was done by Nidhi, who was a related party. Internal auditor found out that she entered into a non-cash transaction without registration with the RBI. Company has incurred the cash losses. There is the resignation of the statutory auditors, material uncertainty regarding the ability to meet the liabilities, and then the CSR and the CFS. Right, the CSR and the CFS. Okay, right. So in the exam, if there is a question, undisclosed income, statutory auditor needs to report in which clause of Caro? Clause 8, clause 9, clause 10, or clause 11? Undisclosed income, which clause of Caro do you need to report on? Clause 8, 9, 10, 11? Clause 8, and which is regarding the undisclosed income. Are you getting? That's also how the MCQ come in the exam. Like, say resignation of statutory auditors, you need to report under which clause of Caro? 17, 18, 19, 20? Resignation of statutory auditor, 17, 18, 19 or 20? You need to report under clause 18 of Caro 2020. Right? So at least, and whenever you want to reach a particular clause, again start from the story. A story you can cut it into two parts. 1 to 10 is one part of the story. Please inform landlord and landlady about the 6 things. That is part 1 of the story before the interval. And after the interval, you come to know about the fraud was done by Nidhi, who was a related party. So that starts from 11, 12, 13, and then 14, 15, 16, then 17, 18, 19, and then 20 and 21, right? So 3, 3, 3, and 2. Are you getting that? What are the first 3? Fraud was done by Nidhi, who was a related party. Then internal auditor found out that she entered into a non-cash transaction without registration with the RBI. Then cash losses. Then resignation of auditors, material uncertainty regarding the ability to meet the liabilities, and then you have the 2 points of C, that is the CSR and the CFS, right? The corporate social responsibility and the consolidated financial statements. Okay, right? So right now let's begin with clause 1, which is regarding the property, plant, equipment and the intangible assets, right? Property, plant, equipment and the intangible assets. Under 1, what do you have? 1A, capital A, capital B, and then you have the B, C, D and E, right? You also have the B, C, D and E. Okay, right? So if I just show it to you practically, obviously we are in a revision batch, but just to give you a glimpse of what we are discussing over here in the class, right? What we are discussing here in the class. Maybe if I open it here, I can also do the markings for the same. Right. So if you see this is Infosys audit report, after the main audit report true and fair view, you see the Caro reporting, right? Annexure B to the independent auditors report. And there what you see in respect of companies, property, plant, equipment and intangible assets. That is that clause 1. In 1 you have 1A, capital A, capital B, then 1B, then 1C, 1D and 1E. Right, likewise you see the reportings, then 2A, 2B. Now Infosys being a software company does not have any inventory and hence reporting under 3.2A of the order is not applicable. Then 2B is regarding working capital. It says the company has not been sanctioned any working capital in excess of 5 crore and hence reporting under 3.2B of the order is not applicable. Right, so what we are studying, is it practical? Yes, it's 100% practical. Right, we see the reporting being done by the auditors and we've already seen in case of which companies is the Caro reporting applicable. Are you all with me? Yes, everyone. Okay, so now are you understanding what is Caro, what does it mean, what is it that we are required to do? Okay, I am the statutory auditor of the company. I have to express an opinion on the true and fair view of the financial statements. That is my main bread and butter, that is my main objective of the audit. In addition to that, central government has told me okay, these are the 21 additional points of reporting to be done by statutory auditor. Okay, auditor, you also need to report on these points. And these are the 21 clauses of Caro 2020. So clause 1, what I need to report about is the property, plant, equipment and the intangible asset. Now what do I need to report about the property, plant, equipment, intangible asset? Now right now you're sitting in this academy, does it have a lot of property, plant, equipment over here? Right, so now if Caro reporting is applicable, it says what you need to report, that whether the company is maintaining the proper records. Right, proper records means what? PPE register. So whether the company is maintaining the proper record showing the full particulars including the quantitative details and situation of the PPE. Right, so what is clause 1A over there? Whether the company is maintaining the proper records showing full particulars including quantitative details and situation of PPE, property, plant, equipment. So you have to check their fixed assets register, serial number, cost of asset, total cost of asset, depreciation for the year, depreciation till date. Then what is 1AB? Whether the company is maintaining the proper record showing full particulars of the intangible assets. So one is property, plant, equipment. Second is what? Intangible assets. That is clause 1A, proper records. What do you mean by proper records? The fixed assets register. So as an auditor, I will check and then I will report. What I will report? Yeah, this company is maintaining the proper records. Like see in case of Infosys, what does the auditor say? All of you with me? Company is maintaining proper records showing full particulars of PPE. Company is maintaining proper records showing full particulars of intangible assets. Do you understand that? Yeah. Then second point, what auditor needs to report? Whether the property, plant, equipment has been physically verified by the management at reasonable intervals. Physical verification, whose responsibility? Management's responsibility. So whether fixed assets have been physically verified by the management at the reasonable interval. We are not writing for intangible asset. Physical verification only of the PPE, the property plant equipment, whether they have been physically verified by the management at reasonable interval. So say as per the books of account, Infosys has 20,000 ACs. Just an example I'm giving. So on physical verification also, did they find the 20,000 AC, right? And if they found only 18,000, that means 2,000 ACs are missing. So what is that? Material discrepancies noticed on physical verification. Have they been properly dealt with in the books of account? Have they been properly dealt with? So now 2000 ACs, what they'll have to do? They'll have to write off because they are not existing. What is reasonable interval? When would you say that fixed assets have been physically verified at reasonable interval? When the time gap between two physical verification is not more than 3 years. So at least once in 3 years, they should come and physically verify all the assets. Who? Management. It is management's responsibility, right? So whether PPE have been physically verified by the management at reasonable intervals, and then what does it say? Whether material discrepancies noticed, have they been properly dealt with? So Infosys report, what does the auditor say? There is a program of physical verification which in our opinion is reasonable. And what does it say? There are no material discrepancies noticed on physical verification. Because what did it say? If there are material discrepancy, are they properly dealt with? Infosys, what do they say? There are no material discrepancies noticed on the physical verification. Right, then clause 1C. What is 1C? Whether title deeds of immovable properties, are they held in the name of the company? If not, provide the details thereof. Right, title deeds of the immovable properties, are they held in the name of the company? Right, what is an immovable property? Land, building, or so, right? So immovable property. So Infosys, if it has a building, in whose name that building should be? It should be in the name of Infosys. Is it okay if that building is in the name of the director of Infosys, of promoters of Infosys, or relatives of Infosys? No, it should be in the name of the company, other than the lease agreements and a lease property, where the lease agreement is duly executed in favor of the lessee. Because if it's a leasehold land and the lease agreement is in the favor of the lessee, that means it is in the name of the company. That means it is assumed it is in the name of company. But apart from leasehold land, say they have some freehold land. So now I want to check whether the freehold land of Infosys, is it in the name of the Infosys? How I can check that? By checking the whether the lease though is for leasehold land. Now I'm talking about freehold land. How to check whether freehold land is in the name of the company or building is in the name of the company? You check the title deed. You check the Yes, you check the sale deed, conveyance deed, transfer deed to check whether the asset is in the name of the company. So ask Infosys how many buildings they have. So how can I check that? From the PPE register. And for each building, you check the title deed, whether they are in the name of the company. Check how many land they have. Then check each land, is it in the name of the company? So title deeds of immovable properties, are they held in the name of the company? If not, provide the details thereof, right? So what does it say? Based on our examination of the property tax receipts and the lease agreement, the registered sale deed, transfer deed, conveyance deed, we report that the immovable properties, right? The title deeds of all the immovable properties are held in the name of the company. Are you seeing that? Are held in the name of the company as at the balance sheet date, right? So that is clause 1C. Then what does it say? Whether any revaluation has been done of the property, plant, equipment, including the right of use assets or the intangible assets or both, right? Revaluation of the property, plant, equipment, including the right of use assets or the intangible assets or both, has been done during the year. If any revaluation has been done of property, plant, equipment, including right of use assets or the intangible assets or both, then what does it say? If yes, then you have to report on these 3 points. Infosys, what does their report say? Company has not revalued its PPE, including right of use assets and intangibles during the year. So no further reporting required. It says if you have done a revaluation, then what does it say? Whether the revaluation has been done by a registered valuer. Then also what is the amount of the change? Okay, earlier say the value of your asset was 100 crore. Now it has become 80 crore or 120 crore. And what does it say? If the change is of 10% or more, then the details have to be given for each class of property, plant, equipment or the intangible assets. Right, if changes, so total change, so you have to give. And when do you have to give the individual change for each class? When the change is of 10% or more. Right, when is this applicable? When there is revaluation done. If no revaluation is done, then not applicable. right? So whether any PPE, including the right of use assets or the intangibles or both, have been revalued during the year, then what are the 3 points? Whether revaluation is based on the valuation by a registered valuer, specify the amount of the change, and if the change is 10% or more in the aggregate of the net carrying value. So how they ask the question in the exam, net or gross carrying value, right? So net carrying value of each class of the PPE or the intangible assets. Are you getting that? And then what does it say? Whether any proceedings, yes, 1E, whether any proceedings have been initiated. Initiated means started fighting last year. What do you mean by proceeding? Legal proceeding, fighting, dispute, contingent liability. So whether any proceedings have been initiated or pending. So initiated means started fighting last year. Pending means this fight is going on since last many years. Have been pending against the company for any Benami property, right? For any Benami property under the Prohibition of Benami Transaction Act. What does it say? The details have been disclosed in the financial statements. What do you mean by a Benami property? Right, so if I purchase a property, I should pay the consideration for the property and the property should be in my name. But what's a Benami property? I have purchased a property, I have paid the money, but the property is not in my name. It is in the name of somebody else. Or I have purchased the property is in my name, but I did not pay the money, somebody else paid the money. So there is a mismatch between who paid the money and in whose name the property is. That's called as a Benami property. So what does it say? Whether any proceedings have been initiated or are pending against the company for any Benami property under the Prohibition of Benami Transaction Act, whether the details have been disclosed in financial statement. Can anybody think of where it would be disclosed in financial statements? In the notes to account, in the contingent liabilities, the details of the fighting, the proceedings would be given, right? So Infosys, what does their report say? Are they fighting with anybody? It says the company, yes, no proceedings have been initiated or are pending against the company for holding any Benami property, right? So no question of it being disclosed in the financial statements. Why I'm showing this to you? So that you get a practical approach of what we are discussing over here, right? So that is clause 1. This is only clause 1. Likewise, we have to go up to clause 21. Are you understanding? Now, in the exams, if a question comes, okay, what are the reporting requirements under clause 1? Property, plant, equipment, intangible assets. This is all what you need to write in the answer. Right? This is all what is required to be written in the answer, right? Property, plant, equipment, and the intangible assets, okay? But don't worry, all clauses are not so big. Which are the big clauses over there? Clause 1, clause 3, clause 9, and also the clause 416. And they have like A, B, C, D, E up to F and all. Some are like small also, very cute clauses over there. 4, 5, 6 are very small. Because 5, 6 is the very cute. It's so small. Clause 6, cost to records. All are not like, such big dinosaurs over there. You understand that? Okay, right? So clause 1, which is regarding the PPE and intangible assets. Now coming to clause 2, which is regarding the inventory and the working capital. Okay, you know what's the paradox of life? Whenever you don't pay attention in the class, that comes in the exam. So you say, ma'am, what you are saying. So does that mean that if I always pay attention in the class, nothing will come in exam? No, that the second half of the sentence doesn't hold good. The first half of the sentence hold good. Okay, the moment that you don't study, and that only comes in the exam. Sampling risk. Sampling risk? And the sample does not represent the entire population. You thought, this won't come in exam. Exactly, that's what comes in the exam. So that's what you say. No, not very important. I don't know. I'll just just see it like that and go. What you properly see and go, that also you can't write in exam. Just see and go what you will do of that in the exam. Okay, right? So clause 2, which is regarding the inventory and the working capital. So clause 2A is regarding the inventory. Whether inventories have been physically verified by the management at reasonable intervals. Whether inventories have been physically verified by the management at reasonable interval. Now for inventory, what is going to be reasonable interval? At least once in a year. For fixed asset, it was once in 3 years. Right? And then what does it say? Whether the coverage and procedure for such verification, has it been appropriate? And for PPE, what did it say? Material discrepancies noticed. Here, what does it say? Discrepancies of 10% or more. Have they been properly dealt with in the books of account? Right? Discrepancies of 10% or more. For PPE, what did it say? Material discrepancy. Here, what does it say? Discrepancies of 10% or more, have they been properly dealt with in the books of account? That is, as per the books of account, how much inventory was there? Say 200 kg. On physical verification, say 180 kg. So is there a discrepancy of 10% or more? Yes, then whether it has been properly dealt with in the books of account, right? So whether inventories have been physically verified by the management at reasonable interval, that is first part. Then second, whether the coverage and procedure of such verification is it appropriate, right? So you need to check, are they doing, so for fixed assets, we didn't have this point, whether the coverage and procedure is it appropriate. Here also, what does it say? Whether the coverage and procedure for physical verification is it appropriate, and discrepancies of 10% or more, have they been properly dealt with in the books of account, right? That is the clause 2A. Then clause 2B. What is 2B? Whether at any point of time during the year the company has been sanctioned working capital limit in excess of 5 crore, has been sanctioned the working capital limit. So whether they have used it or not, don't know, but they've been sanctioned working capital limit in excess of 5 crore, not 5 crore and above, excess of 5 crore, 5 crore 1 rupee, on the security of the current assets. So what does it say? At any point of time. So what happened? During the year, the company had been sanctioned a working capital limit of 6.5 crore. However, by the end of the year, it came down to 4.5 crore. Still, will you report under clause 2B? Still, will you report? Yeah, because it says at any point of time. At any point of time, that means 365 days, and 1st April to 31st of March, not only 31st March. You understand the question, right? Whether at any point of time the company has been sanctioned the working capital limit in excess of 5 crore on the security of the current assets. Yes, now obviously if you take a working capital limit from the bank, do you need to submit your quarterly returns and statement to the bank? Right? If you've taken the what do you say, working capital CC overdraft from the bank, it will be against the security of your current assets. So do you need to submit your quarterly return statement to the bank? Who needs to submit? Company needs to submit. So now what they are telling auditor, okay, auditor, whatever quarterly return statement this company is submitting to the bank, are they in agreement with the books of account? Bankers are very happy. Why? Because now whatever quarterly return statements are coming to the bank, CA is checking them. Okay, are they in agreement with the books of account? Why? Because CA has to report under clause 2B of CARO. Right? So whether the quarterly returns or statements which are submitted to the bank's financial institutions, right? The quarterly return statements which are submitted to the bank's financial institutions, are they in agreement with the books of account, right? Are they in agreement with the books of account? So see, so much of additional burden on the auditor once CARO becomes applicable to the company, right? He has to check, okay, whatever bank, if the company has got a working capital limit in excess of 5 crore, whatever return statements are submitted to the bank or financial institution, what CA needs to check, are they in agreement with the books of account? Because many a times what used to happen, they used to show higher amount to the bank. Say actual inventory the company is only 10 crore. In the quarterly return statement, happily they used to say 18 crore. Show higher value of the inventory over there. So now can they do that? No, the CA is going to check, are they in agreement with the books of account? Do you understand that? Yes, do you understand? Okay, right. So that is clause 2, which is regarding the inventories and the working capital, right? Clause 2, which is regarding the inventories and the working capital. Right, now coming to clause 3. What is clause 3? Loans, investments, guarantees and securities. What is LIGS? Loans, investments, guarantees and securities, right? So loans, investments, guarantees and the securities, right? So whether the company has granted any loan, made any investments, given any guarantees or provided any security. Loan you give, investment you make, guarantee you give and security you provide, right? So whether any LIGS, loans, investments, guarantee, security, what is 1A, 1B? Whether the loans guarantee security. So not talking about investment. 1A is talking about the loans guarantee, 3A is talking about the loans guarantee security. What does it say? The aggregate amount and the amount outstanding as at the end of the year of the loans guarantee security to subsidiary, associate and the joint venture, and the aggregate amount and the amount outstanding to other than subsidiary, associate and the joint venture. So loan guarantee security, what is the total amount of loan you've given to your subsidiary? Say 10 crore. What is the balance outstanding at the end of the year? Say 5 crore. Right? To subsidiary, associate, joint venture, and aggregate amount and amount outstanding which is given to other than subsidiary, associate, joint venture. So what breakup we have to give? Loan guarantee security given on behalf of the given to subsidiary, associate, joint venture, and to other than subsidiary, associate, and the joint venture. You understand SAJV? What is SAJV that I have written over there? Subsidiary, associate, joint venture, and then other than subsidiary, associate, and the joint venture. Right? Then 3B is regarding LIGS. What is LIGS? Loans, investments, guarantee, security, whether the terms and conditions thereof are not prejudicial to the company's interest. Right? Not prejudicial means they are not harmful to the company's interest. That means what? Company has given a loan of 50 lakh. How much loan company has given? 50 lakh. What security they've taken? 20,000. What they have said? Rate of interest 0.01%. What is the period of repayment? 50 year. You say, ma'am, danger. Dangerous, prejudicial, it is detrimental, it is harmful, it is dangerous to the interest of the company, it is not in the best interest of the company, it is prejudicial. Prejudicial means what? It's harmful to the interest of the company and its members. Are you understanding? So whether the terms and conditions thereof are not prejudicial to the company's interest. Are you understanding that? Right? The terms and conditions thereof are not prejudicial. So inventory working capital, then what did I tell you? LIGS. Then LGS2, aggregate amount outstanding to subsidiary, associate, joint venture, aggregate amount and amount outstanding to other than subsidiary, associate, joint venture. Then whether all this LIGS, what does it say? The terms and conditions of the, yes, are not prejudicial to the company's interest, right? Not prejudicial, not dangerous, not harmful, not detrimental to the interest of the company. Are you understanding that? Right. Then C pointers for the loans and advances in the nature of loan. Right. So now everywhere, what do they say? Loans and advances in the nature of loan. Loans and advances in the nature of loan. Loan and advance in the nature of loan. Right. Because sometimes what you say, no, I have not given a loan. I have just kept an advance with them. Well, what you are telling? Window dressing, nothing but it's a loan only. And if I say I'm giving a loan to you, it means a loan. Okay, you have to repay me. Or if I say I'm giving an advance with you, then understanding in the mind is different, no, of a loan and advance. So what they started doing, they started manipulating. So then Caro said, no, both loans and advances in the nature of loan. So even though if you say an advance, we know ultimately it is nothing but a loan only. So that is why what do they say? Loans and advances in the nature of the loan, whether the repayment schedule of the principal and interest, whether it has been stipulated. So have they been given a repayment schedule for the loans which have been given, and also whether the receipts are regular. Right? So whether repayment schedule has been stipulated and whether the receipts are regular. Right? So if I give a loan to somebody, I should give them a repayment schedule. Okay, this installment you need to pay on this date. And then when will I say that the receipts are regular? If I receive the money on or before the due date, I will say that the receipts are regular. Are you understanding? Then D, what is due? Say if the amount is overdue, then state the amount which is overdue for more than 90 days. Because you know, bank also, when does an asset become an NPA? For bank also, when does a standard asset become a non-performing asset? When it is overdue for more than 90 days. So here also, what is the point? Overdue for more than 90 days, and whether reasonable steps have been taken for recovery of the principal and interest. Right? Reasonable steps have been taken for the recovery of the principal and the interest. Are you understanding 3D? Right? 3D is again for the, yes, if it is not regular, then state the amount which is overdue for more than 90 days, and whether reasonable steps have been taken for the recovery of the principal and the interest. Okay. Now, I have given a loan to somebody and they are not able to repay. I have given a loan to somebody, loan or an advance in the nature of the loan. I have given to somebody and they are not able to repay. I say, don't worry. You're not able to repay the loan. Look at the greatness of the heart over here. Now, what do I say? You're not able to repay the loan. Any loans or advances in the nature of loan which the other party is not able to repay. What do I say? Don't worry, I will give you a fresh loan. Or don't worry, you can't repay right now, pay me after 2 years. Or what do I say? Yes, I issue them a, right, or I reconvert, right, extend. I say I extend the period of the loan. right? So whether any loans or advances which have fallen due during the year and they could not be paid, then what the company did, they issued the fresh loan, or they extended, or they renewed the loan. Why? To settle the overdue of the existing loans. To settle the overdue of the existing loans. Are you understanding? Again, is this detrimental to the interest of the company? I've given a loan to a party and that party is not able to pay. I say, don't worry, I will give you one more loan. From that loan, you repay my loan. Oh my God. Or, I've given them, you need to pay me in next 1 year. They're not able to pay. I say, no problem, pay me after 3 years. I extend it. Or I say, forget this, I will give you a new repayment schedule. Right? So again, what reporting is required to be done by the auditor? What is the amount of such loans which have been renewed, extended, or fresh loans granted, and the percentage to the total loans. And okay, total loans were 100 crore, and out of that, say 10 crores of the loans have been renewed, extended, or fresh loan. Then the percentage to the total loans. Are you getting that? Right? Is required to be reported by the auditor. Getting everyone? Right? That is 9E, and then after, sorry, 3E, and then after that you have the 3F. Now what does it say? Company have given loans without specifying the terms of repayment. So I'm giving you 10 lakh rupees. Then you say, ma'am, when do I need to repay? I say, we'll see it later, don't worry. And so without specifying the terms of repayment, or saying that whenever I ask you, you give it to me. So which are repayable on demand. Which are repayable on demand. So one, I have not specified. I said, okay, we'll see it later. Or second, what do I say? Whenever I ask you, you give it back to me. I'll not tell you any specific date. Right? So which are without specifying the terms of repayment, or which are repayable on demand. Again, what does it say? The amount. The percentage to the total loans. Okay, out of the total loans, how many loans you've given, like this. And the amount of such loans which have been given to the promoters of the company. Right, so now here three details are required: the amount, percentage to total loan, and the amount of such loans which have been given to the promoters of the company. Right, so total say 100 crore. Out of that, 10 crore loans are repayable on demand, and out of that, say 2 crore loans have been given to the promoters. Right, so you have to give the details. So yes, to amount, the percentage to total loan, and the amount of such loan which have been given to the promoters. Right, so that is clause 3. What is clause 3? Loans, investments, guarantee, security. You have to give the details of the transaction, and this is the A, B, C, D, E, F. Are you getting it? Right? LIGS, loans, investments, guarantees, and security. Right? Then next clause is what? Clause 4. What is clause 4? LIGS, loans, investments, guarantee, security. Are they in compliance with the provisions of section 185 and 186 of the Companies Act 2013? That's it. So for this, what you need to know? You need to know the provisions of section 185 and 186 of the Companies Act. And you have to check whether loans, investments, guarantee, security, are they in compliance with the provisions of section 185 and 186. Simple. After studying three big clauses, this is very small. Clause 4, LIGS, whether it is in compliance with the provisions of section 185 and 186 of the Companies Act 2013. Clear to everyone? Right. Then coming to clause 5. What is clause 5? Deposits from public. Right. You have the deposits from public. What does it say? Whether the company has accepted any deposits. Right. Accepted any deposits. If not accepted any deposits, reporting not applicable. Like if you say in case of Infosys, right? Infosys, what does it say? 3, company has made investments in the and granted unsecured loan. Company has not provided any loan and not given any security. Terms and conditions are not prejudicial. They've stipulated and the receipts are regular. You know, whatever we study, repayment schedule, whether it has been stipulated, receipts are regular. Then there is no overdue amount, because what do we say? If the overdue is more than 90 days, they say we have no overdue amount. Then what does it say? Which no loan granted has been renewed, extended, or fresh loans have been granted to settle the overdue of the existing loan. Then company has not granted any loans which are repayable on demand or without specifying any terms of the period of the repayment. Right? Then what is clause 4? The company has complied with the provisions of 185 and 186. Clause 5, company has not accepted any deposits, and hence 3.5 of the order is not applicable. Right. So obviously when will 3.5 is what? Clause 3 of clause 5 of para 3. This F point. Okay, company has given a loan to another party of say 1 crore, and they say, okay, obviously if I give a loan, should there be a repayment schedule? Should there be a repayment schedule? But it says no, without specifying the terms of repayment. Or saying, okay, no, no, no repayment, nothing. Whenever I want the money, I will ask it again from you. So that is repayable on demand. That those type of loans you have to report over here. So say total loans given by your company were 100 crore. Out of that, say 10 crore of the loan you gave them without specifying the period of repayment of which are repayable on demand. So what is the amount? 10 crore. What is the percentage to total loan? 10%. And say out of this 10 crore, 2 crore loans were given to the promoter. So that 2 crore amount you have to mention. To the company. No, company has to give a loan. Huh, huh, yeah, okay. But still it will come. You have to report it. Still have to report. No, 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 no. It has to be reported over here. Okay, because the loan was given which was without specifying the terms of repayment or which is repayable on demand. So that will come. They are not saying which is outstanding as at the end of the year, anytime. You understand that? Okay. Right. So that is over there the clause 3, then clause 4. Now coming to clause 5. What is clause 5? Public deposits. So whether the company has accepted deposits. If it has accepted deposits, then whether it has complied with the RBI directives, whether it has complied with the section 73 to section 76 of the Companies Act and the rules made there under. So, many of the clauses of CARO tell the statutory auditor to check the compliance with the sections of the Companies Act. Like clause 5 is telling me to check the compliance with section 73 to section 76 of the Companies Act and the rules made there under. If not complied, okay, RBI directives not complied, company law not complied, rules not complied, what does it say? State the nature of the contravention. Is everybody with me in the class? Right, state the nature of the contravention. Okay, what is the non-compliance? And if any order has been passed, who can pass the order? NCLT, National Company Law Tribunal, Company Law Board, RBI, court, or any other tribunal. At least that order has been complied with or not. So say order says now you need to pay interest. So whether as per the order have you paid the interest on deposits or no? So one, have you complied with the law? If you have not complied with the law, then what is the contravention? If you have received any order, obviously if you don't comply with the law, you may receive an order from NCLT, CLB, RBI, court or tribunal. At least now whether that order has been complied with or not. Right, that is clause 5. Public deposit. Has the company accepted deposit? Not accepted deposit, happy, no reporting. Clause 3.5 of the order is not applicable to the company. Like in case of Infosys. But if they have, then you need to check the compliance. If they've complied, happy, no further reporting. If not complied, then state the nature of the contravention. Order passed, no order passed, happy, no reporting further. Order passed by NCLT, CLB, RBI court, then whether the order has been complied with or not. Are you understanding clause 5? Okay, now coming to clause 6, which is regarding the cost records. What do you mean by cost records? MLO. What is MLO? Material, labor and other items of cost. That is cost records now. And material, labor and the other items of cost. Who will prescribe the maintenance of cost records? The central government under section 148(1). So where maintenance of cost records has been prescribed by the central government under section 148(1), statutory auditor under clause 6 of CARO, simple, you have to report whether such cost records have been made and maintained. That's it. So are you going to do a cost audit? Are you going to do a detailed examination of the cost records? No, you just have to check whether the cost records have been made and maintained. Right, when look at this, statutory auditor, full burden of work. Okay, you check PP register also, you check loans, investments, guarantee security also, you check working capital limit in excess of 5 crore also, you check cost records also, public deposits also. But Infosys maintenance of cost records has not been specified by the central government, and hence reporting under clause 6 of the order is not applicable to the company. Are you understanding? So what are the important words over there? Made and maintained, right? Then clause 7, which is regarding the statutory dues. Right, clause 7, which is regarding the statutory dues, 7A and 7B. Right, 7A, undisputed statutory dues. What is undisputed? I am saying I have to pay GST of 3 crore, and department also says that yeah, we have to receive a GST of 3 crore from you. And a disputed statutory due, I am saying I have to pay GST of 3 crore, and department says no, you have to pay GST of 5 crore. Right, so undisputed and disputed. For undisputed statutory dues, auditor, you need to do two reporting. What two reporting? One, the regularity of payment, whether the company is regular in depositing the undisputed statutory dues. When will you say that a company is regular in depositing? When they paid the statutory dues on or before the due date. So whether the company is regular in depositing the undisputed statutory dues. And second, those undisputed statutory dues which are outstanding as on the date of the balance sheet for a period of more than 6 months from the date they became payable. Those undisputed statutory dues which are outstanding as on the date of the balance sheet for a period of more than 6 months from the date they became payable. I'm talking about undisputed. Say example, I'm doing Caro reporting for which year? Listen to me carefully. In the entire duration of the class, I'll be taking year end as 31st March 2026. And 2026 already done. And 2026 is already over. Now say we are in next year. Okay, now say TDS on contract was to be paid by the company since July 2025 and it is not paid up to 31st March. Now July, no, 3rd of July 2025, example. So now July 25, now I am reporting for 31st March. Until 31st March 26 it is not paid. Look over here, August, September, October, November, December, January, February, March. Is it outstanding as on the date of balance sheet for a period of more than 6 months from the date it became payable? Yes, you need to report. Say TDS on advertisement was to be paid by the company since 2nd of February 2026, not paid up to 31st March 26. Will auditor report? 2nd February, March. Is it more than 6 months? No. So obviously all those undisputed statutory dues which are outstanding on or before, on or before, on or before, no re. Or that means here I have to report on those undisputed statutory dues which are outstanding on or before 30th of September of that financial year. Because if it's before September, only then October, November, December, January, February, March. If it is after September, then it is not going to be more than 6 months. Are you understanding? And no, central government logic is very simple. It is undisputed. Why outstanding for more than 6 months? Is there liquidity crisis in the company? Right? And for disputed statutory dues, two reporting. What is the amount for which you are fighting and where are you fighting? Are you fighting in the Supreme Court, High Court? Where are you fighting? So the amount involved and the forum where the dispute is pending. And mere making a representation to the department does not constitute a dispute. The company needs to go on appeal. Right? Mere making a representation does not constitute a dispute. Are you understanding that? Clause 7. What is clause 7? Statutory dues. Undisputed statutory dues and the disputed. For undisputed, regularity and 6 months. And for disputed, amount involved and the forum where the dispute is pending. Are you fine, all of you? Yes, we've just reached till clause 7. You have to be fine. We have to go up to 21. Okay. And this is just the first chapter. We have a long way to go over there. Okay. Right. So now let's see Infosys. What does it say? Companies generally regular. Means sometimes they make delay also. They are generally regular in depositing the undisputed statutory dues and there are no dues which are outstanding for more than 6 months. Obviously, it's a cash-rich company. No outstanding over there. Now fighting. Fighting. What does it say? The amount involved and the forum where the dispute is pending. Right? So 1,030 crore. Income tax appellate authority 5,216 crore. Right? Duty of excise 68 crore. And again they've written which financial year does it relate to. Service tax 327 crore, 2004-5 to 17-18. Right? Then corporate income tax 188. Panchayat property tax 16 crore. So that is what all this will be. Also you will see it in the contingent liability in the notes to account. All of these you will also get to see them in the contingent liability in the notes to account. What have they given over there? The amount involved and the forum where the dispute is pending, right? The amount involved and the forum. That is clause 7, which is regarding the statutory dues. Are you all with me? Right. Now coming to clause 8, which is regarding the undisclosed income. Right, undisclosed income. This year we are doing audit for which year? 31st March 2026. Right, 31st March 2026. Okay. Now say what happened in 2022. The company had done some tax evasion. And now income tax department, can there be a raid or something, and later on you come to know, they come to know that this tax evasion you had done earlier? Right. So what happened? Transactions which are not recorded in the books of account. Transactions which were not recorded in the books of account, right? So 2022, when you prepared your financial statements, did you disclose this income of 25 crore? No. But now that has been surrendered or disclosed as income. It has been surrendered or disclosed as income during the tax assessments under the income tax law. Has been surrendered or disclosed as income during the tax assessments under the income tax law. Now what does it say? Whether that previously unrecorded income, has it now been properly recorded in the books of account? Whether the previously unrecorded income in 22 though you did not record, so now in 26 whether it has been properly recorded in the books of account, right? Previously unrecorded income, now in 26 has it been properly recorded in the books of account? Yes. Now 22 you did evasion, but now in 26 you surrendered, and you disclosed this as income during the tax assessments under the income tax law. So whether previously unrecorded income, has it now been properly recorded? How 22 ka income will be recorded in 26? As a prior period item. It will has to be recorded as a prior period item. Are you understanding that? Right. So transactions not recorded, unrecorded, now properly recorded. So NUP, because it's recorded, but what are the recorded? Not recorded, unrecorded, now properly recorded in the books of account. Right. So that is clause 8. What does it say? Transactions not recorded but have been surrendered or disclosed as income during the tax assessments under the income tax law, whether the previously unrecorded income, has it now been properly recorded in the books of account? Are you getting that, everyone? Right. So that is clause 8. Right. Infosys, do we need to see, is there any undisclosed income of that sort? What does it say? There are no transactions relating to previously unrecorded income that have been surrendered or disclosed as income during the year in the tax assessments under the income tax law. Getting, everyone? Right. So that is clause 8. What is clause 8? Undisclosed income, unrecorded income. Okay. Right. Now coming to clause 9, which is regarding the repayment of the loans and borrowings. Right. Repayments of the loans and borrowing. Right. So again under 9 we have 9A, B, C, D, E and F. Right. What is 9A? Whether the company has made any default in the repayment of loans or borrowings to any lender. Yes, if yes, then it says the period and amount of default is to be reported, right? So company has taken a loan from the bank and it has not repaid the loan on time. So statutory auditor, you need to report under clause 9A. What you need to report? Whether the company has defaulted in the repayment of loans or borrowing. Right, whether the company has defaulted. So you take a loan from the bank, you had to pay an installment of 5 lakh, you did not pay. Your auditor will put it in the CARO report in clause 9A. What he will put? The period and the amount of the default. Right, then whether the company has been declared to be a willful defaulter by any bank, financial institution or any lender. Who is a willful defaulter? A person who has the money but still not pay. See, if you don't have the money and you don't pay, that is understood. But here you have all the money, but you say, no, I don't have money to pay to the bank. So has been declared to be a willful defaulter. RBI comes up with a list of willful defaulter. So you have to check whether your client, the company which you are doing the audit of, have they been declared to be a willful defaulter by any bank, financial institution or any lender. Are you understanding that? Right? Whether the company has been declared to be a willful defaulter. So whether the company has defaulted, whether the company has been declared to be a willful defaulter, then whether the term loans, have they been applied for the purpose for which they have been obtained. So what did you tell the bank? Why do you want a loan? Right, so you told the bank that you want a loan for purchase of plant and machinery. So what you should do out of the loan money? You should purchase the plant and machinery. What you did renovation of your office building. So then has the term loan been applied for the purpose for which it has been obtained? No. So whether term loans, have they been applied for the purpose for which they have been obtained? So rather here we have to report if there is any misutilization of the loan. And here we have to report if there is any misutilization of the loan. Then 9D, whether funds raised on the short-term basis, have they been used for the long-term purposes? Funds raised on the short-term basis, have they been used for the long-term purposes? Short-term basis means what? CC overdraft. Now CC overdraft, it's a fund raised on the short-term basis. And what you did, out of that you purchased a plant and machinery. Is that a problem? Big problem. Why? Because now there will be a liquidity, there will be a liquidity crisis in the company. Why? Because you've blocked the funds of the company. And short-term funds have been used for the long-term purposes. See, CC overdraft, can I use it for payment of the creditor? Yes. Can I use it for purchase of inventory? Yes. But should I use it for purchase of plant and machinery? No. So whether funds raised on the short-term basis, have they been used for the long-term purposes? If yes, that needs to be reported. Okay, right. Now what has the company done in case of the 9E? It says the company has taken any funds. And why has the company taken the funds? Everybody, you are asking, do you have any money? Do you have any money? Can you give me 2 lakh? Can you give me 5 lakh? Then they ask you, why you are asking for 2 lakh, 5 lakh? Then you say, I don't want it for myself. I want it for my friend. Right, so now the company has taken any funds from any person or entity. And why have they taken the funds? It says to meet the obligations of their subsidiary, associate, joint venture. To meet the obligations of their subsidiary, associate and joint venture. So this type of a company, what we will say, a friend in need is a friend indeed. Oh my God, for my money, I need the money. So for me, they are asking everybody, do you have the money? Do you have the money? So now the company has taken any funds from any entity or person, and have they taken it for themselves? Have they taken it for themselves? No, they have taken it for the meeting the obligations of the subsidiary, associate or the joint venture. Are you understanding that? And now 9F is like you are only a fair weather friend. You are not an all weather friend over there. Now what does it say? Company needs the money. So now what, so you are asking, do you have 2 lakh? Do you have 2 lakh? So now you say, okay, I have 2 lakh, but what security will you give? You'll say, take security of the subsidiary, associate, joint venture. So now you're raising the funds on the pledge of securities of the subsidiary, associate and the joint venture, right? Pledge of the securities of the subsidiary, associate and the joint venture, right? So now you're raising the fund and on the pledge of securities of the subsidiary, associate, joint venture. So 9E, you are a friend of your subsidiary, associate, joint venture, and 9F, you are a foe of your subsidiary, associate and joint venture. You are an enemy. You're pledging their security and raising the funds for yourself, right? For subsidiary, associate, joint venture, what does it say? The amount and whether you've made any default in the repayment of those loans, right? Whether you've made any default, right? So that is 9A, B, C, D, E, F. What is 9A? Yes, whether the company has defaulted. B, whether the company has been declared to be a willful defaulter. Then whether term loans have been applied. Funds raised on short-term basis, have they been used for long-term purposes and taken any funds to meet the obligation of subsidiary, associate, joint venture, or raised any funds on the pledge of securities of the subsidiary, associate and the joint venture, right? So that is clause 9. What is clause 9? Repayment. Then what is clause 10? Issue proceeds. Right, what is clause 10 that we have over there? It is regarding the issue proceeds, right? In 10 you have 10A and 10B. What is 10A? Money raised by IPO, FPO including the debt instruments, right? And 10B, whether money raised by the preferential allotment or the private placement, right? The preferential allotment or the private placement of shares or fully, partially or optionally convertible debentures, right? Preferential allotment or the private placement of shares or which type of debentures? Right, fully, partially or the optionally convertible debentures also. What does it say? Whether the monies raised, have they been used for the purpose for which they have been raised? Whether the money raised, have they been used for the purpose for which they have been raised? So company came up with an IPO, they have to issue a prospectus. In the prospectus, what did they say? Okay, with this money, we are going to set up a new factory. We are going to set up a new manufacturing plant. And they actually set up the manufacturing plant, factory, wonderful. But again, what they did, they purchased car for all the directors of the company from that money. So again, what you say? No, no, money raised by IPO, FPO, it has not been used for the purpose for which it has been raised. And again, preferential allotment, private placement. One, what does it say? Whether it is in compliance with section 42 and section 62 of the Companies Act, and also whether the money has it been used for the purpose for which it has been raised, right? So what is additional point for preferential allotment, private placement? Section 42 and section 62, right? If not, then you have to give the nature of the non-compliance and also the amount which has not been used for the purpose for which it has been raised, right? The amount which has not been used for the purpose for which it has been raised. So is clause 9 very similar, clause 10 very similar to 9C? What was 9C? 9C. But the money is, what does it say? Whether term loans, have they been applied for the purpose for which it has been raised? Term loans. Here, what does it say? Whether issue proceeds, have they been applied for the purpose for which they have been raised? So is it similar to 9C? Yes, 9C was regarding term loan. 10 is regarding four types of issues. Four types of issue: initial public offer, further public offer, preferential allotment, and the private placement. Whether the money is raised, have they been used for the purpose for which it has been raised? For preferential allotment, private placement, what is the extra point? Whether it is in compliance with section 42 and section 62 of the Companies Act, right? So issue proceeds, again asked as a question some 2-3 times, you see it in the question bank, right? So that is the clause 10, right? So what is the story so far, right? Please inform landlord and landlady regarding the deposits, records, dues, undisclosed income, repayments, and the issue proceeds. Are you getting it? Right. Why? Because a fraud was done by Nidhi. So clause 11 is regarding the fraud. What does it say? Clause 11A, 11B, and 11C. Right? Whether any fraud by the company or any fraud on the company. Right? By the company means company employees did a fraud. Right? On the company means the suppliers of the company or some third party did a fraud on the company. So whether any fraud by the company or on the company has been noticed or reported. Noticed means auditor, while you doing the audit, you came across it. Or reported means management came and told you, okay, oh auditor, this fraud happened in our company during the year. So any fraud by the company or any fraud on the company means internal, external, both type of fraud covered. Noticed or reported during the year. If yes, then the nature and amount involved is to be indicated. Right? The nature and amount involved is to be indicated. Should we see whether enforces any fraud? Right. So what does clause 9 say? Company has not taken any 9A, Infosys, company has not taken any loan. Company has not been declared a willful defaulter. Company has not taken any term loan, hence no question of checking whether it has been applied. Then again, what does it say? Funds raised on short term have not been used for long term purposes. Company has not taken any funds to meet the obligation of the subsidiary. Company has not raised any loan, hence reporting under 9F is not applicable. Right, then company has not raised money by IPO, FPO. Company has not made preferential allotment, private placement. Half of the clause is not applicable only. You understand? No, half of the clause is not applicable only. Then what is clause 11? No fraud by the company and no material fraud on the company. Means immaterial fraud has happened. But what do they say? No material fraud on the company has been noticed or reported during the year. So, practically, even though if you take out the audit report of 3-4 companies from Google, like say Tata Motors, don't take out of State Bank of India, because State Bank of India, Caro, not applicable in a banking company. But if you take out of say of TCS, of Cognizant, of Wipro, or say Tata Motors or Mahindra or some other company, and you read their Caro report also, you're good for the exams. If you read those reports also, you'll get a good understanding of the clauses over there. Right. So anyways, what is 9A? 11A? If there any fraud by the company or any fraud on the company noticed or reported. If yes, then the nature and amount involved is to be indicated. Then whether any reporting on the fraud, right? Whether any reporting on the fraud has been done to the central government under section in form ADT 4 under section 143(12) of the Companies Act. Right, so 143(12). What is 143(12)? duty to report the fraud to CG if the fraud is of 1 crore or above. So it says if you have done any fraud reporting to CG, you also need to report about that under clause 11B of CARO 2020. Right, so whether any fraud reporting has been done to the central government under 143.12 filing form ADT 4. Right, then whether the auditor has considered the whistleblower complaints received by the company during the year. What is this whistleblower? Right, whistleblower. Okay, you know that this employee of the company is doing a fraud in the company. You are also an employee and you come to know that this other employee is doing a fraud. So now you want to bring it to the attention of the management. So how you can do that? There should be a whistleblower policy in the company. What you are scared of? You know, I know that this employee is doing a fraud, but what you are scared of that tomorrow if I tell it to anybody, they will take an action against me only, or that employee might take a revenge against me only because I went and told it to the top management. So top management says, don't worry, we will give you adequate safeguard against victimization. Don't worry, you will not become the victim. We will take care of you. But you don't get scared, you come and report the fraud to us. Right, so now what auditor has to do? He has to consider the whistleblower complaints received by the company during the year. So auditor, what I will do? I will ask management, do you have a whistleblower mechanism? Yes. Then what complaints have you received under whistleblower mechanism? They say we've received these 20 complaints. So auditor will just consider the 20 complaints received. Because what is the reporting requirement? Whether the auditor has considered the whistleblower complaints received by the company during the year. So no reporting has been done to the central government in form ADT 4 in case of Infosys. And what does it say? We have, who is the we? The auditors of the company, the statutory auditors of the company, they are doing the CARO reporting. No, we have taken into consideration the whistleblower complaints received by the company during the year. Because what does clause 11C say? Okay, whether we have considered the whistleblower complaints. So what does the report say? We have taken into consideration the whistleblower complaints received by the company during the year. Right? That is clause 11. Then what is clause 12? Nidhi company. Right, what does it say in case of Nidhi company? Okay, where the Nidhi company has maintained the net owned funds to deposits in the ratio of 1:20. Net owned funds to deposits in the ratio of 1:20. What does that mean? If the net worth of the Nidhi is 1 crore, maximum how much deposits that Nidhi should accept? 20 crore. It's something like the capital adequacy ratio. Right, if net worth of the Nidhi is 1 crore, maximum how much deposits that Nidhi should accept? 20 crore. Should not happen that net worth of Nidhi is 1 crore and accepting deposits of 400 crore. Not good. Right, so net owned funds to deposits in the ratio of 1:20 to meet out the liability. Then at least 10% of the investments of the Nidhi company should be in the unencumbered term deposit. What do you mean by unencumbered? Free of any charge. No loan has been taken against them. So if the total investments of the Nidhi company are 100 crore, at least 10 crore should be in the unencumbered term deposit. What do you mean by unencumbered? Free of any charge. That means against that FD I have not taken any loan. Against say that term deposit, what's the term deposit? FD, fixed deposit receipt. So against that, so Nidhi company has 10 crore deposits, and again those 10 crore deposits, have they given it as a security for any loan? Have they raised any money against that? No, it is unencumbered. Right, so whether the company's Nidhi has meant at least 10% of the unencumbered term deposits, and Nidhi company, whether there is any default in the repayment of deposits or interest thereon. Whether there is any default in the repayment of the deposits or in the payment of interest thereon. Because Nidhi company, would they have accepted deposits? Yes, and now whether they have made any default in the repayment of deposits or in the payment of interest thereon. Right, so any default in the repayment of deposits. Right, so clause 12 is what? Nidhi company. What clause is this? Clause 12. If now in CARO I have to write it as small Roman number, but actually which clause it is? Clause 12. So 1:20, and then at least 10% unencumbered term deposits. Right, so 12. So 12 is 1:20. That is how you can remember. And then you also have the at least 10% of the unencumbered term deposits. That is clause 12. Then we come to clause 13, which is regarding the related parties. What does it say? Whether the transactions with the related parties, are they in compliance with section 177 and 188 of the Companies Act? Whether transactions with the related parties, are they in compliance with 177 and 188? What is 177? Audit committee. Audit committee, audit committee. What is 177? Constitution and the powers of the audit committee. And what is 188? Related party transaction. So whether transactions with the related parties, are they in compliance with section 177 and 188, and whether the details of the related party transaction have been disclosed in the financial statements in accordance with the applicable AS. Right? What is the applicable AS for related parties? Yes, AS 18 or the Ind AS 24. Right, AS 18 or the Ind AS 24. Right, so two parts. Actually, there is no AB, but as such, the sentence is divided under two parts. What are the two parts of the clause? Whether the transactions with the related parties, are they in compliance with section 177 and 188, and the details have been disclosed in the financial statements in accordance with the applicable AS. So no, SA 550 is how to do the audit of related party. Here we are talking about the disclosures as per the applicable AS. Right, here we are talking about the disclosures. So disclosures have to be given as per the accounting standard, right? So that is the clause 13. What does it say in case of Infosys? Company is not a Nidhi company. Wonderful. Then 13, what does it say? In our opinion, the company is in compliance with section 177 and 188, and the details have been disclosed as required by the applicable AS. Right, details have been disclosed as required by the applicable AS. So that is clause 13. Now coming to clause 14, which is regarding the internal audit. Yes, internal audit. What is clause 14? Whether the company is having an internal audit system commensurate with the size and nature of its business. So whether the company is having an internal audit system which is commensurate with the size and nature of its business. That is, bigger the company, bigger should be the internal audit system in the company. Should not happen that company has a turnover of 10,000 crore and only two people in the internal audit department. You'll say not matching. Look at the size of your company. Look at the size of your internal audit department. Not commensurate with the size and nature of its business. Company turnover 10,000 crore. At least say some 10-12 people should be there in the internal audit team of the company. Right, so whether the internal audit system, is it commensurate with the size and nature of its business? Also reminds me of section 138, which is internal audit, and also reminds me of SA 610, using the work of the internal auditors. Right, so whether the company has an internal audit system which is matching with the size and nature of its business. And second, whether the reports of the internal auditor, right, whether the reports of the whether the internal auditor's report for the period under the audit, have they been taken into consideration by the statutory auditors? Have they been taken into consideration by the statutory auditors? Right, so whether the reports of the internal audit reports for the period under audit, have they been taken into consideration by the statutory auditors? So statutory auditor, are you going to go through the whistleblower complaints of the company? Yes, whistleblower complaints. Yes. Are you going to go through the internal audit reports of the company? Yes. Statutory auditor, you also have to go through the internal audit reports of the company. Are you able to follow that? Right. Infosys, what does it say? In our opinion, the company has an adequate internal audit system commensurate with the size and nature of its business. And we have considered the internal audit report for the year under audit issued to the company during the year until date. Right. Who is the we? The statutory auditors of the company. So that is clause 14. Are you all with me? Internal audit system, is it matching? And whether in statutory auditors, have they taken into consideration the reports of the internal auditor for the period under audit, right? Then you have the clause 15. What is clause 15? Non-cash transactions, whether the company has entered into any non-cash transactions, whether it is in compliance with the provisions of section 192 of the Companies Act. Right, so what's a non-cash transaction? Like say company is purchasing goods from directors. Can they purchase goods from directors? you have to, what do you say, have some approvals and all. It's a related party transaction. Ideally, I should not purchase goods from the director, company. But subject to certain condition, can a company purchase goods from director? Yes. Now for that, will you have to make the payment to the director? You purchase the goods from director or his relatives, then will the company have to make the payment for that? Yes. Now instead of making the payment, they are giving him a car. So what's that? That's a non-cash transaction. So can they give him a car also? Yes, but that has to be in compliance with the provisions of section 192. Okay, but it requires the approval of the shareholders in the general meeting. Okay, I am purchasing goods from director and I am giving him a car for that. Barter exchange. Right, then it says if he is also a director of holding company, then also the approval of shareholders in the general meeting of holding company. Otherwise, again, this might be what, taking the personal interest of the directors may be there. Misuse of the company funds may happen. First, so what we say, you should not purchase goods only from the director, but they are purchasing. Then again, instead of making payment in cash, they are making payment in kind. So that is non-cash transaction. Companies Act, there is a section 192. So whether the provisions of section 192 have been complied with or not. Right, that is clause 15, which is regarding the non-cash transactions. Then coming to clause 16, which is regarding the registration with the RBI and the NBFCs. Right, registration with the RBI, Reserve Bank of India, and the NBFCs. Right, so 16, it has 16A, B, C, and D. Right, so first you need to check whether the company that you are auditing, is it an NBFC? Right, is CARO applicable to banking company? No, but is it applicable to a non-banking financial company? Yes. So one, what you need to check whether the company is required to be registered under section 45IA of the RBI Act. Is it required to be registered under section 45IA of the RBI Act? When are you required to register? When you're doing non-banking finance activity. Like what's a classic example of a non-banking finance activity? Housing finance, lease finance, or hire purchase finance. This is all what? Non-banking finance. So whether the company is required to be registered, and if it is required to be registered, then whether the registration has been obtained. Registration has been obtained means COR. What is COR? Certificate of registration, whether it has been obtained. So first what you need to check whether the company is required to be registered. You say no, this company is not doing any finance work. Then again, Infosys, obviously what do you expect to see in Infosys report? It is not required to be registered under section 45 IWA because they are not into any finance activity. But if you see Sriram Finance, right, if you see Muthoot Finance, then will they be required to be registered? Yeah. Are those banks? No, but they are NBFC, so they will require registration. Infosys, what does it say? Company has not entered into any non-cash transactions, and 192 is, hence 192 is not applicable. Then what is clause 16A? Whether the company is required to be registered under section 45IA, then whether the registration has been obtained. Infosys, what it says? Not required to be registered, because we know it's not into finance activity. Okay, right? Then after that, what does it say? Whether the company has conducted any HFA. What is HFA? Housing finance activity, or any NBF. What is NBF? Non-banking financial activity, without holding a valid certificate of registration. What is COR? Certificate of registration. So whether the company, so if Infosys, if they do some housing finance work or some non-banking financial work, do they have a registration for that? No. So without a registration, if they do all these activities, it says they will be, or statutory auditor will report under 16B. Whether the company has conducted any housing finance activity or any non-banking financial activity without holding a valid certificate of registration. Whether the company has conducted any non-banking financial or any housing finance activity without holding a valid certificate of registration. Okay, then in NBFC there is one concept of core investment company. One you have is an investment company, and then you have a core investment company. Okay, if my investment company can invest in share securities of any other company, then I'm an investment company. But my investment company, if it can invest only in the Tata group, then it's a core investment company. If I can invest only in the Mahindra group, then I am a core investment company. Further, core investment company could be a registered CIC, where you need to register it with the RBI. and a register certificate of registration you need to obtain from the RBI, or some are exempted. You know, you need to fulfill certain criteria, and then it says you are an exempted or an unregistered CIC. So one investment company. In investment, it could be core investment company. Core investment company of yours might be a registered CIC, or it may be an unregistered or an exempted CIC. So it says if the company is having a registered CIC, does it fulfill the criteria of being a registered CIC? Yes, does it fulfill the criteria of being a registered CIC? And it says if it is an unregistered or an exempted CIC, you understand CIC? Right? Core investment company, unexempted, unregistered or the exempted CIC, whether it continues to fulfill such criteria. So if you say you're a registered CIC, then do you fulfill the criteria of being a registered CIC? If you're an exempted CIC, do you fulfill the criteria of being an exempted CIC? Whichever way, whether they fulfill the criteria for whichever of the type of the CIC they are. Are you understanding that? And then say company has 4 CICs. One invests in Tata Group, one invests in Mahindra Group, one invests in say the, you know, some another group over there, say some Reliance Group or so. Right? So now what does it say? If there are more than one CICs which are part of the group, then indicate the total number of CICs which are part of the group. If the company has more than one CICs, then indicate the number of CICs which are part of the group. Right? If the company has more than one CIC, if only one CIC, then again clause 16D not applicable. But if it has more than one CICs, then indicate the number of CICs which are part of the group. Infosys 16 ABC not applicable, and there is no core investment company within the group. So again 16D also not applicable. Are you getting that? Right. So that is 16. What is 16? Registration with RBI and the NBFCs. Right. So we've completed. Fraud was done by Nidhi, who was a related party. Internal auditor found out that she entered into a non-cash transaction without registration with the RBI. Yes. Then you're not a core investment company. Yeah, so you have 4 companies. Through one company, you invest in Tata Group. So that's one core investment company. Huh. Yeah, something like that. Not one company investing in all of them. You have a separate companies. One company for investing in Group A, one company for investing in Group B. So then you have to give the number of CICs which are part of the group. You understand that? Okay. Right. So that is regarding the clause 16. Now coming to clause 17. Clause 17 is what? Bad news. What is the bad news? Right. The company has incurred the cash losses in the financial year. In the current financial year, company has incurred the cash losses in the financial year and in the immediately preceding financial year. In my example, for which year I am reporting, 2026. What is previous year? 2025. So there is cash loss in 26 and 25. Then we report under clause 17. Then we need to do the reporting under clause 17. There is cash loss only in the current year, no reporting under clause 17. There is cash loss only in the previous year, no reporting under clause 17. When is there reporting under clause 17? When there is cash loss in the financial year and in the immediately preceding financial year. Both the years there should be a cash loss. What is a cash loss? Before considering non-cash expenditure like depreciation, also there is a loss. Right, that is a cash loss. Right, so whether the company has incurred cash loss in the financial year and in the immediately preceding financial year. Only previous year cash loss, only current year cash loss, no reporting required. Are you understanding that? That is clause 17. Then what is clause 18? Resignation of the statutory auditors. Right, resignation of the statutory auditors. Right, so where the auditors of the company have resigned during the year, right, where any resignation of the auditors have taken place during the year, whether the issues, objections and concerns. What is IOC? Issues, objections and concerns of the auditors who have resigned, have they been taken into consideration by the auditor? Have they been taken into consideration? right? So if the auditors of the company have resigned during the year, so say who was doing the audit, say KPMG, now KPMG resigned, now who is doing the audit, say PwC. So whether PwC, have they taken into consideration the issues, objections and concerns raised by the outgoing auditor, which is KPMG in my example. So incoming auditors, have you taken into consideration the issues, objections and concerns of the outgoing auditor? Who is the outgoing auditor in my example? KPMG. And who is the auditor who is doing Caro reporting right now? Say PwC, right? KPMG, PwC are name of CA firms. You understand that? Okay. So whether the incoming auditor, have they taken into consideration the issues, objections and concerns raised by the outgoing auditor? So Infosys, what does it say? Company has not incurred cash losses during the year and in the immediately preceding year. Then there has been no resignation of the statutory auditors, right? There has been no resignation of the statutory auditors. But if there would have been a resignation, then what you need to consider? The issues, objections and concerns. Okay, right. Then after that, now coming to clause 19, which is regarding the material uncertainty, the ability to meet the liabilities. Okay, which year am I doing audit for? Listen to me carefully. 31st March 2026. Okay, what is foreseeable future? You know, concept of foreseeable future, going concern, 1 year from the date of the balance sheet. So what will be foreseeable future? 1st April 2026 to 31st March 2027 in my example over here. Okay, so which date I am issuing audit report? Example 25th of April 2026. For which year? 31st March 2026. Okay, now as on 31st of March, will the company have some dues which they will have to pay as and when they fall due within the next 1 year? 31st March, when company close books of account, next 1 year, will they have some creditors to pay to? Will they have some statutory dues to pay to the government? Will they have some money to be paid to the employees of the company? Within 1 year, will the company have some dues which will fall due within next 1 year also? There might be dues which will fall due after 1 year also, but there could be dues which will fall due within the next 1 year also. It says statutory auditor of the company, you have to report whether there no material uncertainty exists, that the company is capable of meeting its liability as and when they fall due within a period of 1 year from the balance sheet date. So, you know, we are giving a type of a solvency assurance of this company, liquidity assurance. Okay, next 1 year, the company has enough money to pay its dues. Next 1 year, whatever dues will come, whether the company has the enough money to pay these dues, whether the company is capable of meeting its liabilities as and when they fall due within a period of 1 year from the balance sheet date. So 1 year liquidity check is what now auditor needs to check when he reports on 31st March. And 1 year liquidity check you have to do when you report on 31st March. Now, how do I come to know that whether they have enough money to pay for the next 1 year? So one, I have to know all the amount which will be due in the next 1 year. Then I also have to know all the receipts which they will have in the next 1 year. And then I have to check the match between the two. Do they have enough money to pay all the liabilities which will come in the next 1 year? Now, how do I come to know will they have enough money? It says on the basis of 5 things. What are the 5 things? On the basis of financial ratio, debt or turnover ratio, debt equity ratio, current ratio. Then aging and expected date of realization of financial assets and payment of financial liability. So how old are your debtor creditor, and what is the date of you receiving the money, and what is the date when you will have to make the payment? Expected date of realization of the financial asset and the payment of financial liability. Then other information accompanying financial statements, so that is nothing but the other information in the annual report of the company. Yes, knowledge of the board of directors, our knowledge of the board of director and the management plan. So based on these five, which five? Financial ratios, aging and expected date of realization of financial assets and payment of financial liability, other information accompanying financial statements, auditor's knowledge of the board of directors and the management plan. Whether the auditor is of the opinion, nothing has come to our attention that any material uncertainty exists, that the company is not capable of meeting its liabilities as at the balance sheet date, as and when they fall due within a period of 1 year from the balance sheet date. right? So what do they say? Nothing has come to our attention that the company is not capable. Do you know algebra, everybody? Nothing has come to our attention that the company is not capable. Minus minus plus, that means the company is capable. But do we say company is capable? You say, ma'am, I miss my heartbeat when I say that, company is capable. It's very strong assurance you give now. So that is why look at the drafting. Nothing has come to our attention that causes us to believe that the company is not capable. Means ultimately what you're saying, company is capable of meeting its liability as and when they fall due within a period of 1 year from the balance sheet date. Are you understanding that? Right? Same point if you see it over here also. What does it say? Again, on the basis of those five. And a financial ratio, aging, other information, auditor's knowledge of the BOD and management plan, whether the auditor is of the opinion. So like how you express opinion on true and fair, now you have to express opinion on this. Okay, no material uncertainty exists as on the date of audit report, like 25th of April in my example, that the company is capable of meeting its liability existing at the date of the balance sheet as and when they fall due within a period of 1 year from the balance sheet date. Right? Did I just explain all of this to you? You have to check whether they have enough money to pay their dues as and when they fall due within a period of 1 year from the balance sheet date. Right? So that is material uncertainty regarding the ability to meet the liabilities. Are you getting that one, everyone? Material uncertainty regarding the ability to meet the liabilities. That is clause 19. Then what do we have next? Clause 20. What is clause 20? CSR. What is CSR? Corporate social responsibility. Which section of company law? Section 135. But what does it say? At least 2% of the average net profits of the immediately preceding 3 financial year. What is ANP? Average net profits of the immediately preceding 3 financial years is required to be contributed for the CSR purposes. Okay. Then say 2% of net profits is coming to 100 crore, just as an example. That is the amount the company needs to spend for the CSR. Now, one, they might have decided that entire 100 crore we are going to spend for education. Or entire 100 crore they know they have to spend, but they have not yet decided how to spend, what CSR activity to do. Or there may be a situation that 60 crore they are yet to decide, 40 crore they've decided that they will use it for the setting up of, for education, for setting up of school. And say other they are yet to decide. They are yet to decide how to use this 60 crore. I am just giving you an example. So 60, 40 crore, say total how much they have to spend for CSR? 100 crore. That is 2% of their net profit. So now, one, they could have decided how to spend the entire 100 crore, or they could have not decided any of it. Or like what I gave an example, some decided, some not decided. Right? So 20A is regarding the unspent CSR amount, is the unspent amount for other than ongoing project. That is other than the ongoing project, other than the ongoing project. And 20B is regarding the ongoing project, the unspent amount relating to any ongoing project, because the entire 40 crore I'm not going to require in one day. I will require it over a period of time for setting up of the school and education. So what does it say? Other than ongoing project, whether it has been transferred to the CSR fund within a period of 6 months of the expiry of the financial year. Right? So like whether it has been transferred to the CSR fund within a period of 6 months of the expiry of the financial year. And related to ongoing project, whether it has been transferred to the unspent CSR account within a period of 30 days from the expiry of the financial year. Right? Within a period of 30 days from the expiry of the financial year. You know something like dividend, unpaid dividend account. And a dividend has to be paid within 120. Yes, it has to be paid within 30 days. If not paid within 30 days, within 7 days, it has to be transferred to the unpaid, unclaimed dividend account, something like that over here. So other than ongoing project, whether it has been transferred to the CSR funds within 6 months of the expiry of financial year, and related to ongoing project, whether it has been transferred to the unspent CSR account within 30 days from the expiry of the financial year. So 20A, 20B. 20A is regarding the other than ongoing project, and 20B is regarding the 20A other than ongoing project, and 20B is regarding the ongoing project. Okay. Clear to everyone? Clause 20, it is regarding the CSR, corporate social responsibility. Okay, and then the last one over there, which is clause 21, right? Clause 21. Okay, do you understand these two types of financial statements? Standalone financial statements and consolidated financial statements. Everybody? Do you understand standalone and conso? What is standalone? Holding company, parent company alone. And what is consolidated financial statements? Parent, subsidiary, associate, joint venture, all of that put together. Now, yes, you are doing the audit of standalone financial statements or of consolidated financial statements. What is IAR that I have written over there? Independent Auditor's Report, right? Independent Auditor's Report. Okay, so now in Caro reporting for standalone, I report under clause 1 to 20. So for standalone financial statements, which clauses of Caro are applicable? Clause 1 to 20. And for consolidated financial statements, which clause of Caro is applicable? Only clause 21. And now only clause 21 of Caro is applicable to Conso. So now in Conso, whose financial statements are going to be there? Holding company and the subsidiary company. Just to keep my example simple, say company has only two subsidiaries, subsidiary company 1 and 2. And say to all three of them, Caro is applicable. Holding company applicable, subsidiary also applicable, second subsidiary also applicable. Will the auditors report in their individual reports on clause 1 to 20? Will their auditors in their individual report, holding company alone, subsidiary company alone, subsidiary company alone, for whom individually Caro is applicable, will their auditor report from clause 1 to 20? Yes, their auditors will report from clause 1 to 20. And say your auditor has reported under clause 2 that inventory has not been physically verified at reasonable interval. Or, transactions with the non-cash transactions with the directors are not in compliance with section 192. I'm just giving an example. Whether you find out a qualified or an adverse remark. These are what? Qualified or adverse remark. Inventory has not been verified. Non-cash transactions are not in compliance with 192. Then subsidiary company Caro report, what does it say? Clause 1, company has not maintained the proper records. Or clause 14, company does not have an internal audit system commensurate with the size and nature of its business. And here say there is no adverse remark of the auditor in Caro reporting. Clean. Everything is goody goody good. There is no qualification or adverse remark. Now in my Caro report on Conso, only clause 21 is applicable. So I will write down the details of the company. So I will write down the name of the company, the details of the company. What is going to be the detail? Okay, this is holding company. Then other two are the subsidiary company 1 and subsidiary company 2. And this is the parent company, say P Limited, whatever it is. And then I have to give the paragraph number of Caro where there is a qualification or an adverse remark. So holding company, against that what I will write? 2 and 15. Right, then for subsidiary company, what I will write down? Clause 9 and, yes, say clause 1 and clause 14. Clause 1 and clause 14. And for subsidiary company 3, no. So when I have to give the Caro reporting on CFS, I have to read all individual subsidiary, everybody's Caro report. In their Caro report, I have to see which paragraph number as a qualification adverse remark. Here, prepare a table of all of that put together. Yes, could you understand all of this? Seriously, you're just trying to make me happy, or did you really understand? You understand? Huh, what point means? In the exam, we have to write this here. What is to be written in exam is given over here. Whether there have been any qualification or adverse remark. So I told you clause 2, clause 14, there is a qualification or adverse remark by the respective auditor in the Caro report of the company included in the CFS. If yes, indicate the details of the company and the paragraph number of the Caro report containing the qualification or the adverse remark. Yeah, name of the company. Honey, name of the company, then the detail, whether it's your holding subsidiary, and then the paragraph numbers of Caro, where there is a qualification or adverse remark. So like, this is parent company. Parent company name is P Limited. Who is this? This is the parent company. And the paragraph number of Caro, where there is a qualification or an adverse remark. Then you write down S Limited. Who is S Limited? Say subsidiary company. And which clauses of Caro? I don't know the numbers. I'm just writing any numbers over there. Like clause 1, clause 14, clause 16, whichever. This is how. This table will come in the Caro report on CFS. This table will come in the Caro report on CFS. None of the paragraph, hence any qualification adverse remark in any of the subsidiary company, any of parent company, then no reporting will come. Obviously, when you have to give the report over here, when you have to mention the paragraph numbers over here, when there is a qualification or adverse remark, like what did I tell you, inventory has not been physically verified, or then the company non-cash transactions are not in compliance with section 192. So what is that? That's a qualification or an adverse remark in the Caro report. So those paragraph numbers you have to give in the Kansoka Caro reporting. Are you understanding, everyone? Yes, everyone, did you understand? So standalone 1 to 20 and Conso only clause 21, right? So that's the Caro 2020. What is the story? Please inform the landlord and the landlady regarding your deposits, records, dues, undisclosed income, repayment, and the issue proceeds. Why? Because the fraud was done by Nidhi, who was a related party, who found out internal auditor that she entered into a non-cash transaction without registration with the RBI. Company has incurred the cash losses. There is resignation of the auditors. There is material uncertainty regarding the ability to meet the liabilities, and 2 points of CSR and the CFS. Obviously, what is your, what you say, topmost priority, that whatever of Caro we have studied today, right, you immediately need to study the entire provisions and cover it properly, right? So that's one part of our discussion. After the break, we come to the discussion on SA 210, which is engagement letter, and then 700, 701, 705, and 706, which is regarding the auditor's report, right? So we study engagement letter, and then after that we also study the auditing standards regarding the audit report, right? So we take a break and then we shall continue. Okay, right.